None of this shit.
I bought some more shirts. I bought 15 more shirts.
Me too, bro. That's what I should have did. That's what I was going to do. That's what I said I was going to do last week. That's what I almost did. That's why I woke up and did.
There you have it, the last opening bell of this year.
Shut up.
That's the last opening bell of the year, bro.
48,371.
Who gives a
down not even 1 point. Has red, no, that was green. It's up 1
What's up,
point.
Yeah.
S&P 97. So watch that back and forth after the VIX really tell you the story that 14, 15,
Yeah, no money. Yeah, there's no money this year.
So we're in this little sort of right around the unchanged line for the stock, for the major indices.
It makes shit. Yeah, it makes shit. Yeah.
Ever so slightly up about 13 points. Oil and gold are mixed. Gold's down 32 bucks. While gold's up just slightly. Joining me right now, George Stillis, and we have a lot of stories to discuss today. And one name that has really done incredibly well, and that is Alphabet Google, and was on their stock hike too, right, George Stillis?
Yeah, I know.
Yeah, good morning, Nicole. When it comes to Google, you have to consider how they've caught up tremendously over the last year to OpenAI. I think Gemini 3 launch has been tremendously successful, and they're integrating artificial intelligence across all their platforms, including, of course, their cloud platform, including verticals like the TPU sensor chips. Waymo's been successful as well, and I think if you consider their two preeminent brands when it comes down to search and YouTube, those are the two largest search engines globally. So, with that said, analysts are still constructively bullish on Google. If you look at Citizens, they upgraded the stock to $385 from $340, maintain an upward rating, and they still see strength in their core search business, like I mentioned, YouTube and of course Google search as the two largest search engines globally. They are updating, of course, the integration of cloud, which if you look at their last quarter results, cloud grew 30% year over year. They're actually besting Amazon Web Services, which that name also grew 20% year over year. But again, integrating artificial intelligence within their ecosystem has been quite successful, and from a programmatic standpoint, if you just look at what Gemini is doing, they're actually,
you want me to leave out of here too?
cases or many examples are better than OpenAI in many regards.
All right, well, 312 today. Incredible time. And so many of these names did hit records, and it was an outperformer, those Max 7. Not all the Max 7 names did well in the fourth quarter. Let's talk about Nike. I mean, we heard about some insider buying and some top people buying recently, and now some more.
Yeah, so I was just looking at the chart. You go back to the reported earnings and just a couple weeks ago, it gapped out, but it's recovered a lot of that price action. So the whole story with Nike is still essentially a recovery play. And there's, of course, what's going on with the CEO, which he'll recently purchased approximately $1 million worth of shares. After retiring in 2020, came back in late 2024 to basically revitalize the brand. There's a lot of imbalances going on with Nike. If you look at the 5-year chart, down 57%, 1 year down 18%. It's pretty remarkable, and this name has not performed.
Oh, thank God they didn't do that.
With this market move to the upside. But nonetheless, if you look at some of the challenges that Nike has faced, the first, the direct-to-consumer really hasn't manifested into the expectations a lot had hoped for. The China growth model also, if you look at last quarter, there seems to be some regional imbalance with sales in China down 17% year over year, but nonetheless, North American sales have been improving up 9% year over year. So there seems to be a vote of confidence now with the CEO making a direct acquisition of additional shares, and it's creating some lift to the shares today as a result.
Yeah, and that comes on the heels of Tim Cook, who bought some Nike shares recently as well. So definitely must be the talk of the town at the big cocktail parties. Let's talk about Hyatt. They had to update the guidance.
Yeah, so I mean, Hyatt's been a relatively stable performer over the past couple of years. Done extremely well since the COVID pandemic. Over the last 4 or 5 years, when it comes down to the luxury brands, pricing power, Hyatt is doing very well alongside Marriott. Now, there was an adjustment that the company declared in terms of their earnings they reiterated financial guidance slightly to the downside for 2025. This was based upon Hurricane Melissa, which came in around October, that impacted their Jamaican properties. The Flight Hotel acquisition, which was done in June, seems to have been impacted based upon the hurricane. Again, there's going to be some business interruption insurance that I'm sure they'll be sorted out. But nonetheless, they actually brought their EBITDA guidance down to the low end of the range, in which again, they published on their last quarterly earnings between 1.09 billion and 1.11 billion. So the strategy has been high price in terms of luxury and upscale properties. That seems to have manifested, but again, a little bit of pullback today, not necessarily a very large impact in terms of the EPS guidance, but nonetheless a slight decline today.
Yeah, and they have 7 properties that now will be under reconstruction and not opening till the 4th quarter. But I was happy to read, George, this October Melissa hurricane, which was probably one of the worst on record ever, particularly for Jamaica, but that they said that the people were evacuated safely and assistance is, needed and all that. So a work in progress there in beautiful Jamaica. George Sillis, thank you. Wonderful to see you. Happy New Year. Coming up, Ted Woodford is standing by. He's joining me right here at the NYSE desk, and we'll take a look ahead to 2026. He's been doing some great stock picking this year. What does he say for the new year? We'll be right back.
Hey, bro, why Joe don't like you, bro? A lot of these are starting off red.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Time for the very latest here on the floor of the New York Stock Exchange. Ted Weisberg back with me, founder and president at Seaport Securities, joining me. And throughout the years, he's picked Meta. That has been a great one. You had Chubb. You talked about the exchanges, which then took off. You talked about the airlines, which then took off, no pun intended. But another great year. I mean, double digits again.
Well, yeah, double digits. I mean, and the third good year in a row. Go figure. Who thought?
Yeah,
right?
What happens next year? I mean, right?
Oh, well, let me look at my crystal ball. I don't know. Let's see what it says. Who knows? Hopefully it'll be a decent year. You know, it's the backdrop is still quite positive. Corporate earnings remain good, if not very good. Will it be a duplicate of this year? Who knows? Your guess is as good as mine, Nicole.
Would you take 5 to 8% or something like that? Maybe something a little more reasonable, closer to the annual returns of yesteryear?
You know, this year, as we turn the calendar, will be my 64th year in Wall Street. 64 years. I'd like to think that I've learned something in 64 years. And the one thing I have learned is not to make any kind of predictions on what next year is going to look like. This is a tricky, difficult, but yet fun business, and risky. I just think on balance next year, hopefully, will be decent. We've had 3 good years. You know, greed is a tough emotion to deal with, so we don't want to get too greedy. I think folks continue to have to do their homework. It's never easy. It's always risky. You know, it's all about finding the right rabbits in the right sectors, and the game keeps changing. The markets keep shifting, and there'll be plenty of opportunity. That we know for sure.
So, you know, you picked some great ones. You had Chubb, and you had Exotica, the eyewear, and many others. But when we talk about tech, do you have to have tech in your portfolio?
Oh, well, I think so, because tech is where all the earnings are. I mean, that is still the big growth sector. Clearly, at the moment, it looks like they've kind of run out of steam a little bit, but clearly, it's also not over for the tech names. That's where the growth will be. That's where the earnings will be. You know, trees don't simply grow to the sky. Sectors rest. The good news is, as far as the overall market, is that the market breadth has spread out from the tech sectors. So other sectors are starting to do really well. Financials, for example, you know, which have been laggards. But almost every day there's a major bank stock on the new high list. And there are other sectors that are acting well. Even some of the energy stocks. Exxon, this week, Exxon made a new high. I mean, out of nowhere, Exxon making a new high. So the fact is there are opportunities everywhere. It's a cliche. It's not a stock market. It's a market of stocks.
And you're a stock picker in many ways,
Oh,
too.
yes.
You think it's important to do your homework and pick a stock, whether it's looking at cash flow or the management or everything. What are some names that you think might work for 2026?
Well, you know, it's interesting, but first of all, we're staying with the same sectors. We're staying with the airlines, UAL, and we like at the laggard of the top 3 would be American. That's an interesting play. We still like the insurance job. We haven't deviated from the names that we talked about last year, but some of the new names might be, for example, in the stocks that pay big dividends. Because in this environment of falling interest rates, which is a positive for the overall market, it's also a positive for companies that pay decent dividends. Because folks will start to leave, for example, the money market arena and start to look for equities that pay decent dividends, which is where we were in the environment where there was interest rates were 0. The big dividend-paying stocks were quite popular. So there are many choices in many sectors, but I think that will be a theme in 2026 as interest rates come down. And December is always an interesting month for us, and we tend to look through the graveyard of lumps of coal of stocks that have fallen out of favor to hopefully find a couple of diamonds.
Did you find a loser?
Well, we
that
found
might be
plenty of
next year's winner?
We found plenty of losers, but we think we found a couple of winners there. We were buying some Baxter Labs. We're buying some Dow
Baxter Labs.
Baxter
Yeah, Dow
Labs,
Chemical.
BAX, and we're buying some Dow Chemical, and we're also looking at Kraft Foods, KHC.
Oh.
All 3 of these names, and there are others, are trading where they are for good reason. They got problems, but basically we're betting that these problems will be dealt with going forward, and we're thinking in the next 6 to 12, maybe 18 months, these lumps of coal will turn into diamonds.
Well, I'm glad you're still showing up because our friend Warren Buffett, who's been here on the floor of the stock exchange, today's his last day. And so he'll stay on as chairman for Berkshire Hathaway. You know, any thoughts on what happens to a big conglomerate like Berkshire Hathaway, or it's clearly the end of an era when you see Berkshire Hathaway's Warren Buffett and Charlie Munger passed, and the rest of these Buffett stepping down. Your thoughts?
Well, I only follow Berkshire like everybody else. From what I read in the paper, we don't happen to own the stock. I would say it's going to be a period of adjustment. Clearly, he has tried to pick very good people to replace him. But I remember when Sandy Weill stepped down from Citibank and he appointed Mr. Prince the chairman of Citibank, and that was a big change for Citibank. The stock did nothing for 5 or 7 years. So I think
I'm looking at the chart here. It went from 290. This is a 3-year chart. 292 to 542. It's at 504 right now. But and also just some of his investment style. Like boring is good, right?
Well, once again, there's going to be a new sheriff or sheriffs in town, and they're going to have their own style. It will take time for them to prove their worth. And so I would say, once again, I don't own the stock, but I think it's a stock that's probably going to trade sideways for the indefinite future till the proof is in the pudding and we see how the new people do.
Yeah, and look, I mean, Buffett and private equity love insurance, it says. That's an area that you've always loved. The rails was something that you loved. You loved the rails.
Right, we own the rails.
Is he calling you, Teddy? Is he calling you?
Well, we owned the rails before he did.
Yeah.
I can't say we owned the insurance stock before he did because he built his business on the insurance
And last but not least, Bank of America, that's another one that you like.
Well, I like Bank of America because of the big money center banks. I think it's basically been kind of left behind. Yet recently made a new high. But people forget that Bank of America owns Merrill Lynch. Merrill Lynch is a huge brokerage firm. It's kind of lost its identity under the Bank of America umbrella, but it still exists within the Bank of America, and it's a huge factor in the financial services business. And I think that's the real diamond in the Bank of America portfolio.
Can't wait to see you in the new year, Teddy.
Yes.
Gotta go 65 years, okay? So you gotta pay the rent.
Gotta pay the rent.
Super Securities, thank you. Coming up, key levels to watch on the charts. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market. Every trading day, Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Thanks for the invite.
Oh, and we are up. Last trading day of the year, no Santa Claus rally. I just peeked up at the Dow Jones Industrial Average. I can see we're right around those session lows. Joining me right now, Senior Markets Correspondent Kevin Green, taking a look at a few things here, including the 6-month chart of the S&P 500. We did that intraday record on Friday. We'll just take a look at the charts. Let us know your thoughts.
Good morning, Nicole. Yeah, we are actually seeing probably the weakest breath that we've seen to start off the session since over the last week, if you will. We only have one sector in the green, at least so far. Only about 20% of the stocks in the S&P 500 in the green. So a little bit of weakness right here. And this is daily chart just kind of shows me this is the shoulders pattern. We're able to break above that neckline, which is actually bullish, but now we are seeing a little bit of a failure going below that neckline of around 6,900. And seeing a little bit of a pullback. Now, we could see that 20-day moving average is your key area of support. First one sitting there at 6,858, and then your next area of support, the 50-day moving average at 6,800, if you will. Also looking at that momentum indicator, the RSI, we are still making lower highs. So at the end of the day, we haven't seen a complete trend change when it comes to momentum in the market here. It just seems like we're taking one step forward, maybe one step or two steps back, if you will. MACD also looks like it wants to cross in a bearish formation here. But overall, once again, kind of had a little bit of a failure. This is kind of where we're at right now, and we may once again go back, touch with those moving averages, and then try to consolidate and break a little bit higher. That would be ideal for the bulls in this market.
Understood. All right. It's been an exciting year. I mean, we think about the market breadth, and I see here they talk about some of the best names for 2023. 25 in the S&P 500, and they said Intel 86% gain. Following the 27% decline, they had Palantir as the winner. Warner Brothers Discovery, well, we knew that one. Tapestry on the surprise list. There are a few interesting names. Of course, NVIDIA is the winner, too, for the year. Let's take a look also at other levels that might be on your mind.
Yeah, so on an intraday basis, we've already broken through one or acted as an area of resistance, the 6,900 level. We've been focusing on that over the last couple of trading sessions here. We also, on the 15-minute chart, had a bearish pennant pattern here. When we were making lower highs, but also making higher lows. We have now seen a breakdown of that pennant to the downside, which is obviously bearish at this point in time. From a technical standpoint, you could look at maybe some buyers stepping in at 6,875 here, but that next level, when you're looking at the options flow, is actually at 6,840. We're able to recover. You're looking to the upside at 6,920. That's where we see the majority of calls being sold at this point in time. And over the last two sessions, Nicole, we have seen a lot of premium selling in this market. Now, this is also going to be the last trading session of the year. Quarter end as well as the JP Morgan call that will be expiring today. Usually quarter ends. Actually,
to roll up to start understanding what y'all even talking about.
Stocks. In this low volume environment, we'll see if that actually does come to fruition here. But we're
I forgot what y'all was talking about.
Let's see if we actually have a decent little rally for the last hour and a half of the session. Once again, quarter end, get some rebalancing going on here, especially for some of the indexes. And
what he was telling you, boy. Look, that's how motherfuckers get. That's how motherfuckers get run up on the way y'all was talking, boy. I think I got, boy. Y'all could be trying to get me. That's all I know. I just came in and said,
that have been raising the dividend
I know,
for
that's how
over
you
25
get
years.
lined up.
Joining me now for a final conversation here, Alex Coffey, host of Next Gen Investing, and as I look here at the top 20, they have, of course, GE Vernova and GE Aerospace. Newmont, it's just a really research
I got to talking so much shit on 2K, busting ass, boy. I told everybody to Google me, boy. They got to Google me. And now everybody knows I'm the coach.
It's been a great year, kind of combining and building off of what Kevin Green was talking about. Something that's really stuck with me, and Nicole, you know this well.
I'm like y'all hood grandmaster, therapist, your barber.
Maybe
I'm
there's
everything.
an equity market right now, but as a trader, as an investor, and this is something I think, one of the, famous investors that I think is arguably the greatest of all time, and Stanley Druckenmiller, has often credited his ability to kind of go anywhere as a macro investor as something that's led to his consistent performance. Right now, if you're a trader and you're trying to trade in the S&P 500, for example, there's just not a lot of action. But if you look over at silver futures, look at gold futures, or some of the other metals,
I gotta play for it right now.
Nicole, I know this is something that you talk about and you take to heart, which is, it's never really a quiet day. It might be a quiet day in stocks, but there's probably something going on right now. That action is taking place in the metal markets.
Alex, I couldn't agree more. I love that you say that. That is 100% true. And as you mentioned, silver, I will reiterate that David Dietz today said, I said, and he don't, and he said, I mentioned it earlier, and that is, don't keep buying silver. He said, exit. Now take your profit and get out. I thought that was interesting. The jobless claims came in 199,000. The estimate was for 219,000. Kevin Haynes noted he thought maybe it could be skewed, and also it's Warren Buffett's last day. I do feel like it's the end of an era. We did talk about it briefly with Ted Weisberg, who's been trading here for 64 years, so he's watched the Oracle of Omaha, of course. Thoughts?
Yeah, in terms of jobless claims, I think I agree with Kevin. I oftentimes look at the 4-week moving average on that particular print anyways, just to get a little bit of a slower moving volatility. You get a better idea after a month's worth of data. Nothing too alarming there. Continuing claims continue to be elevated, but they're not really
for the second time, boy, that first time, boy, this shit almost killed me.
So still no higher,
But
no
the second
higher.
time,
In terms of Warren Buffett, I just mentioned Stan Druckenmiller is, in my mind, probably the greatest macro, trader or investor of all time. In many ways, Warren Buffett, and I think the performance speaks for itself, is in many ways the greatest kind of stock picking trader or investor of all time, and so you tip your cap to what the Oracle of Omaha has done. In a way, kind of hold that close to my heart. Being as a kid from Omaha, you've known about Warren Buffett your whole life, so the changing of the guard is taking place at Berkshire. We'll see if the performance can continue with the new leadership at the helm.
Once you get used to it.
No way, nobody knew you were from Omaha.
Put that shit in a joint.
People know. Yeah.
I didn't know that. Well, I was like that phrase FOB, friend of Buffett. And when he came down here, I got a great photo with him, and it was really an honor to stand next to Warren Buffett and take a beautiful picture. As far as other stories, I mean, we have ByteDance buying NVIDIA chips, we have Tesla in the cyber cap, you have Boeing getting a new Air Force contract. A lot of exciting things happening, and Warner Brothers, looking probably will reject, Paramount Sky again. Final quick thought?
Yeah, final quick thought. I wouldn't be surprised. This is what Kevin Green was alluding to, that maybe that last hour of trading today, you could see some S&P 500 volatility. But for the most part, 2025, another really, really impressive year, Nicole. I'm looking forward to 26.
As am I. Alex Coffey, great to see you. Thank you, friends, for being with me here
said they don't want to be
on
50
Opening
cents.
Bell
They want to
every
be
day,
70
9
cents right
a.m.
now.
And I'll see you in the new year for this show. Thanks for being with us. Morning Trade Live is next. So stand by.
Schwab Bank Investor Checking, the checking account
should be
built
going
for
so damn
investors,
fast,
ranked highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
What is it that they're getting? A higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live at Quantum.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. We were purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. and discuss what this rotation we're seeing out of tech is signaling. The morning trade today is Alphabet after Citizens raised its price target on shares and sees plenty more room to run for the stock. And later, we'll look at software space with the team from Macquarie and get their top picks in the sector for 2026. So for now, let's take a look at where markets stand. Around half an hour into trading for this final day. Of course, we've got one bell left for the year, so we are looking at a softer picture. No Santa Claus rally. We're coming off the back of 3 days of decline. We're continuing on that sort of trajectory. We've got the S&P 500 just down fractionally. We're at 6886 right now. The Nasdaq is also trailing. The Dow Jones down fractionally, and the Russell 2000 on the line to the downside. So a pretty thin tape, of course. Not a huge amount of economic data to chew on. Of course, we've got some initial jobless claims, but this is how we're sort of wrapping up the year. But it has been a big year of gains for the major indices. Of course, the S&P 500 on track for around a 17% of a rally for the year. So let's take a look at where foreign markets stand, where we sort of ended the year there, because we saw traders in London, Hong Kong, and Paris all getting an early mark today. Half trading days there, and we saw down arrows across the board. But suffice to say, some strong gains for international markets as well, some of which outperformed the S&P 500. So we've got the FTSE just on the line to the downside. The Hang Seng Index down 9/10 despite some encouraging data out of China overnight. I'll get to that later in the program. We've got the CAC now down 0.2%. So that's how we capped off 2025 in regional markets. Let's take a look at futures products as we stand. Obviously, after we got those initial jobless claims as well, the 10-year yields are ticking up right now at 4.14. The US dollar index at 98, but of course we are on track for the worst yearly performance since 2017 for the greenback. Of course, nice outperformance in some of those European currencies, also from Asia. Gold is on the way lower today. We actually are seeing a bit of a sell-off across the metal space. We'll get to KG in a minute for an explanation on why that is. Crude oil, though, continuing to catch a bid here. We are tracking, of course, a lot of geopolitical movement, 0.6% higher. We're on $58 a barrel right now, and Bitcoin is catching a bid today. We are at levels of 88,000 and change. We just still can't get past that 90,000 level, though, on the cryptocurrency. So that's your scorecard to get up and running for the final day of trade for 2025. Let's get to Kevin Green, who joined me on this day. And obviously, we got some initial jobless claims this morning. 199,000 on the headline. Not too bad, actually. One of the lowest this year, KG. What did it tell you?
Well, we also have to keep in mind there's some seasonal factors as well as seasonal adjustments into this number, but we are not seeing a ramp up in jobless claims at this point in time. And in fact, we're starting to see it actually move to the downside from looking at the last couple of weeks, which is a positive sign. And you talked about the fact that it was better than the street's expectations, coming in at 199,000. The street was looking for 219,000. But what's also very key, Sam, is this volatility that we are seeing coming from Texas. And that's really what's been driving a lot of this move to the downside, as well as maybe some slight upticks here. Texas actually saw a 50% drop on a week-over-week basis in initial claims, so that did draw on the index as a whole. You also did see continuing claims also dropping to the downside as well. Once again, major adjustments coming from Texas, as well as major adjustments coming from California. So I would say this is seasonal in nature. Let's see if this is going to be reconfirmed over the next week or 2 weeks here. But overall, we are seeing better than expected economic data. And what's the result of that? The dollar is moving to the upside here today. Yields also moving to the upside. It makes it a little bit more difficult for the Fed to actually cut rates, which could provide maybe a little bit of volatility for the markets as a whole. I'm not sure if that's the main driver for a little bit of selling pressure today if you're looking at the indexes, but once again, the economic data is looking pretty favorable, at least for now. Over the next month or so, month and a half, we probably will get a little bit more of a smoothing out of a lot of the economic data coming from the federal government, as the government shutdown effects are still kind of being reflected in some of the data points.
Yeah, we are looking for a bit of a cleaner picture. Hopefully we'll get that come January. Let's just park the macro aside there. Let's focus on China, Nvidia as well. So while Beijing wants everybody to use domestic chips in the country, the companies over in China have a different idea. They still have a strong appetite for these H200s. We're seeing this report now that Nvidia is saying, hey, TSMC, put your foot on the gas. We need to get these chips there. What are you seeing? What's the significance of this report?
Yeah, it could be actually very significant. It looks like the market's really kind of pricing in that they would like to see the numbers actually being reflected, or China, from a government standpoint, actually confirming this report from Reuters here. But they are reporting that Chinese tech firms have ordered over 2 million chips, H200 chips, from NVIDIA here. Now, NVIDIA right now has around 700,000 within their inventory, so that's a major deficit that you were looking at, and we are seeing potentially TSMC starting to ramp up production of these H200 starting in Q2 2026. Now, this could actually have a meaningful impact when it comes to revenue for NVIDIA. Each one of these chips cost around $27,000. So if you're looking at that $2 million order, if you will, if that does come to fruition, you're talking around $54 billion in revenue that we could see NVIDIA capture. Now, obviously, that will not be in one quarter or even 2 quarters. It could be spread out over a couple of quarters here. And that's something that has not been priced into their guidance moving forward. They have actually removed the China sales when it comes to these GPUs because of the turbulence that we've seen from policy within the United States as well as China. So a really optimistic story that we are seeing right now. NVIDIA actually was in this kind of consolidation pattern, this triangle formation for a fairly long time. It has broken out, but it has not been able to get above this 190 level. Every time that we get to it, we see some significant selling pressure. I think if you can break above 190, close above that level for 2 or 3 sessions, maybe some buyers will then step in and try to reattempt new all-time highs. But this is actually a really decent story. You get a little bit concerned though, Sam, that a lot of these positive news stories around artificial intelligence and these purchasing agreements and things of that nature just has not been able to be a very strong and long-lasting catalyst for a lot of these stocks. That gets a little bit concerning that maybe the market is kind of calling a bluff on maybe some of these news reports.
Yeah, you raise an interesting point. I mean, anything can happen between now and next year, obviously. But it seems like this story has something in it for everyone. I mean, obviously Chinese companies, domestically speaking, that want to get their hands on this stuff, as you say, NVIDIA, which reported strong earnings, SANS, China, also TSMC, and the US government, because they're also going to get a cut from this, according to the Trump administration, too. So, you know, an interesting story. We'll continue to track that one. Let's switch gears to what's happening in solar. It's been a pretty good year. I'm just looking at this TAN ETF. No doubt a moment in the sunshine. Pardon the pun, up 40% year to date. Just talk us through that.
Yeah, well, Sam, it's the end of the year, and I think it's very important for us to kind of look at a lot of industries or even sectors that have been beaten down one way or another. We have seen the solar sector in general see a lot of headwinds when it comes to tax credits being pulled from the U.S. government, as well as maybe policy from the current administration that might not be as favorable. But this is kind of one of those industries that is still thriving to the upside, especially when we're looking at commercial demand. Energy production, especially when coming from solar, is the quickest that you can actually bring to market, bring online in order to put into the grid or even power some of these data centers. So there's still a lot of strength in these companies like First Solar, even Sunrun for that matter, that is actually pushing this higher. So keep your eye out on this. There's other industries like the healthcare industry right now, especially when we're looking at the insurers, that have had a lot of negative headlines, a lot of regulatory headwinds, but maybe they actually do see a little bit of bargain hunting from a lot of investors in 2026 because of the oversold nature of their industry, and maybe that the final product of the ACA readjustments that we might see in 2026 could be a tailwind for these insurance companies. So just trying to draw a little bit of a parallel that sometimes the narrative and the headlines may not actually match the price action that we are seeing for these stocks. And I think the TAN ETF and the solar stocks, for the most part outside of phase, will reflect that this year.
And what is going on with the metal space today? Because we did see a nice recovery yesterday. We're back in the red today. I'm just looking across some of the price action right now. I mean, you've got silver getting hammered to the tune of 6.5%, platinum down about 7%, palladium down 3.5%. I'm seeing this headline, obviously, that's been catching a lot of attention, how China's actually going to pluck a page out of its rare earth playbook now and going to be restricting silver exports, at least starting from New Year's Day tomorrow. How much of that's got to do with it? Just talk us through the price action.
Yeah, so for that story, I think we also have to clarify putting restrictions in and curbing exports rather than potentially banning. And I think the market's kind of preparing that maybe a full-on ban of silver exports could be in the cards for next year. That would actually be a very, very negative signal between the U.S. and China relations, unfortunately. So that is obviously causing some headlines and some movement in the metal space as a whole. I think you're also just seeing the fact that it has run up too far quite too fast here, and we are starting to see maybe a little bit of digestion in the market. We might be seeing a topping pattern taking place. Usually, when we see reversals, it's not a one-day event. You see a battle at very high levels. You see volume being outsized for a couple of trading sessions, and then we try to pick a direction. It's either going to be consolidation and continue to break to the upside, or it's going to be a breakdown when you're looking at silver. Now, palladium, for that matter, was actually down about 8%, 9% in the overnight session. Buyers have stepped in and trying to defend the 20-day moving average. So this is not over with yet. You are seeing that volatility. The market's trying to price in the direction of what's going to happen next. The fundamental story is there, but it's the valuation story where a lot of these metals really making sense for big institutional investors, and I think that's the battle that we're going to see over the next couple of weeks.
Yeah, and we've had a lot of guests talking about this sort of commodity bull market being one of the big stories of 2026, so we'll have to wait and see, but for now we are seeing all the metals down quite considerably. Thanks, KG, for getting us across the price action and some of the macro data and other headlines we're tracking this morning on this New Year's Eve. Coming up, we will dive into the rotation trade we've been seeing and what it means for 2026. Morning Trade Line will be back after this. I'm Nicole Pedalese at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at sheldronfrost.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, see something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab's a tax specialist for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management. No politics, no spin. Just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com. We're back on Morning Trade Live, TKO Group. We'll close out the year with a year 15% gain, and today BTIG sees a new all-time highs after it raised its price target to $250 from $235, getting a buy rating on the shares there. The firm expecting TKO's sports, the live entertainment business, to go strong in 2026. We are trading down 0.7 right now, 212 and change. So let's take a look at the winners and the losers of the final day of trade, and we have Molina Healthcare right up there at 1.9% of a rally there. Nike shares also flying high. We are seeing some news around CEO Elliott Hill and insider purchases there. Lamb Weston is up over 1%, and Clorox is up 0.6%. So we are seeing some nice green across a couple of those names. And then the last of the session, interestingly, among the bunch are these memory names. Now, just remember, these are some of the best names on the S&P 500 this year. In fact, the Western Digital and Micron have been rallying in triple digits off the back of these rising memory prices, the tides of supply with this whole AI frenzy. So we are seeing some selling going on in that sector right now, as perhaps the trade is taking money off the table after the big run-up that we've had this year. Host Hotels and Resorts down 2% right now. All right, joining us now, very pleased to say, Keith Buchanan, Portfolio Manager at Global Investments. Very good morning to you, Keith. Happy New Year's Eve. So, this whole AI trade, Moving into 2026, obviously we've started to see the markets question, the valuation story, the ROI. Does it start to get a little bit more demanding moving into the new year?
Sure, that's where our thinking lies right now. And good morning, Sam. Happy New Year to you as well. We're looking at this rotation out of AI as somewhat of a justification for where we are economically. This whole move from the market's been clamoring for a soft landing for the better part of 2 years now. And now that we're close to being here, according to some of the Fed comments over the last month, what does that really mean? And it actually means, ironically, less Fed policy, monetary policy certainty as we have more dispersion among those opinions of where things should go from here. And also that leads us to a different market tilt that we feel like we started to see over the past month and a half that we feel like can continue into 2026.
Okay, so, a lot of people have been sort of saying that what we saw in the second half of 2025 is likely to be a continuation of what we see in 2026. So, what is the biggest question you're fielding from clients right now about, entering the new year, the positioning, what the Fed's going to do, the macro picture, and this whole technology trade?
Those two questions, whether the technology trade and AI trade continues into 2026 being absolutely dominant as it has over the course of the past 3 years. Also, what does the Fed do about rates? And we don't think those two answers are not overlapping at all. We feel like the Fed is positioned to continue to guide into this soft landing position and cut less over the next year or so than it has over the past year. So that seems to be somewhat consensus. Whether it's 1 cut, 2 cuts, or 3 cuts, I think still yet to be determined. But the path and the trajectory of rates is pretty clear. We think that as that picture becomes more clear and it's perhaps even 1 cut or 2 cuts and not 3 or 4, the market has to start to reconcile the valuations and expectations for the AI revolution and this infrastructure build out. And the natural, rational questions that have been asked over the past month or so are indicative of some of the holes that the market is trying to poke into the story, whether it's funding, valuation, longevity, some of the circular investments. Those questions are rational and should come up on any industry push that has really dominated the market as the way this one has over the last couple of years. So we're looking at that as a rational step into the maturation of this growth phase and the market asking very real questions. And when that happens, you see the market kind of searching for other places for returns within the marketplace. And that seems to find its home in durable balance sheets, cash flow generation, some of those spaces that have been somewhat lost in how the market has ascertained its winners over the past couple of years. We think some of that can continue to build over the last month and a half into 2026 with some of those companies and industries benefiting.
Where is that, Keith? I mean, what corners of the market are you looking at?
Sure, you can find those in every sector. Again, that of course leads to a more selective, questioning and examination of the fundamentals of some of the equities and sectors within the marketplace. We found some of those in industrial. We found some in healthcare. We've seen parts of financial really outperform over the past several months as well. There are pockets of outperformance over the past, particularly the past month and a half, but even over the course of the year, they haven't been in the Mag 7 or in any way associated with that. Those are spaces we feel like have the momentum, perhaps, going into 2026 to continue to outperform, agnostic of what happens with the Mag 7 and the expectation of the AI infrastructure build out to continue into next year. So that's where we're looking in order to position our class for outperformance over the next 12 months.
Okay. It's interesting because we've had some bullish calls for the S&P 500 come year end in 2026. Obviously, a lot can change between now and then, but you've had Evercore ISI looking at 7,750. I mean, we had Jay Hatfield on yesterday calling for 8,000. But there is still some question out there as to, just how bullish everyone's being. I've seen some saying, hey, look, people aren't being bearish enough. So what are you thinking about as far as some of the risks moving into 2026? I mean, what sort of questions are your clients asking about, as I said, some of the risks that are on the horizon as we move into the new year?
Sure. Looking at those expectations and just the consensus of the marketplace going forward in the next 12 months, we're looking at the notion that the single high double-digit means that things over next year will look just like it has over the past 3 years. And we think that's still not the answer. We think you have to dig a level deeper. Even 2025 is indicative of things changing over the course of the entire year. I mean, a lot of international markets outperformed U.S., or several did. You had physical gold and silver obviously having a banner year, and some of the digital currencies not having such a great year. So we're looking at things as kind of 2025 was different from 2023 and 2024. We think that difference can continue even with markets higher 12 months from now than they are today. We feel like that breadth and dispersion within those indices and some of the characteristics that build up to a bull market can be completely different in 2026 as it has been in 2023, 2024, 2025. And we start seeing that started to take place in 2025. So we're not necessarily looking at a high double-digit expectation for 2026 as looking anyway similar to 2023, 2024, and even 2025. We feel like those differences can be very noteworthy. We still have a decent year as far as bullish markets continuing. So we're looking at the nuance of what builds up to that double-digit return in a way that perhaps is not really looking anywhere similar to how it has in the past. So that's what we're looking at.
Okay, interesting take. Keith, we're going to leave it there. Thank you so much for your time. Happy New Year to you. We'll see you in 2026. Keith Buchanan there, Global Investments. Coming up, we will get a closer look at the big picture with the team over at Charles Schwab Morning Trade Line. We'll be right back. I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day slow. Sometimes you know.
Next. Try it again.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. We're back on Morning Trade Live. Netflix is in focus after a report from Variety that the streaming giant recorded its best Christmas viewership of all time. The 2 NFL games on Christmas Day, plus the release of 3 new episodes of Stranger Things, helping fuel Christmas viewership boost. We're trading down after we said 1%. $93 and change. Welcome back to the Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. That is Colin London, Head of Fixed Income Research and Strategy, Schwab Center for National Research. Okay, so Colin, we got through the big events of the year, of the week, I should say. The year, oh my gosh. The week. And that was the FOMC minutes. And it was a bit of a nothing burger, but what it did show us was that there are deep divisions within the Fed. What were your takeaways?
Yeah, that was the main takeaway, Sam, that there are a lot of divisions out there, a lot of dispersion of views, but we knew that already. We can see that from the Fed's dot plot that we got in the middle of December, that there are some officials who are, focusing on, I wouldn't call an aggressive pace of rate cuts, but more projecting more rate cuts going forward. But then there's some that are a little bit more hawkish that are projecting, no rate cuts, or even think rates should be a little bit higher right now. So So no change there. When we look at the minutes, they make a lot of headlines, but it is very vague. And there isn't a way to look at kind of the qualitative approach they provide to how they quantify things. And there's actually a report that the Fed puts out in terms of how many people or officials characterized as few, many, some, something like that. And the key word here was that some thought it was appropriate to hold rates steady for a while. And that's, more than a couple or a few. So there's not just one or two people who are out there thinking that rates are appropriate right now. And that just means the Fed will probably be on hold for a little while. That's our case right now. We think one or two rate cuts next year, but the Fed has time, just like they had time in 2025. They cut rates by a full percentage point in 2024, and then basically went on hold for 9 months. I'm not sure if it'll be 9 months again next year, but I think they can be patient right now, given the economic outlook and given that wide dispersion of views, before we get more evidence that maybe the labor market is cooling more than we think it is, or maybe that inflation is actually steadily moving lower. But I think that'll take some time because it'll take a few months before we get a complete economic picture, as it'll take time for the real data to come in following the reopening of the government.
Yeah, you raised an interesting point, and that's certainly what we were talking about off the back of the last meeting, was the fact that we went from December to September in okay shape, despite the April hiccup, of course, in the markets. But, now it really feels like it's shifted from not just when and how much, but also just around why and how fast the Fed should go as well. You talked about the data. Obviously, we're looking for a bit more of a cleaner picture. We had some initial jobs claims out this morning, looking okay, but there are some seasonal factors to consider here. What are you expecting in the first couple of weeks of January? What data points are you going to be paying attention to the most?
It's going to be the labor market inflation. That has never going to be the key focus right now, but I don't think it's just going to be one more month of data. I think we'll need to see a couple more months before things get kind of filtered through as the government reopened. You mentioned the initial and continuing jobless claims this morning, better than expected. But again, they can be a little bit funky around the holiday season. We saw that around Thanksgiving with a pretty low reading for initial jobless claims, and now we saw another low reading with the Christmas week. So a lot of noise there. We want to see a handful of weeks before we get a more complete picture there. But it's really going to come down to the labor market and inflation. We got some good news with the most recent CPI report, but again, we didn't get a key month of October. So we saw a long-term 12-month trend. We didn't see that monthly trend, and a lot of things were kind of imputed there. So again, very incomplete. So it's not just the next reading that'll matter, the next release, but I'd say 2 or 3 more months, I think, before we get that full, complete picture.
The conversation this morning has very much been the fact that if you haven't made money in this market, you've probably been living under a rock because, obviously we've seen stocks gaining double digits. It's been a nice rally for the commodity space as well. International markets have outperformed too. But just talk us through your sort of bond market wrap-up as far as some of the returns you've seen there and your expectations moving into 2026.
Yeah, it was a really good year for bonds this year. In fact, there's no index that we track that suffered a loss. Now, maybe there's some indexes out there, a little bit more niche ones that are peak, but not ones that we track. It was a good year, like you said. It was hard to not make money with bond investments this year. If we look at high-quality investments, we saw returns anywhere from the high 6% to low 8% area. As we look ahead to 2026, we think that returns can be positive again, but we don't think we'll necessarily see the same magnitude of return. The returns might not be as high, really for 2 reasons. First, yields have declined as the year progressed, so the starting point is a little bit lower, meaning income earned relative to your price will be a little bit lower, so slightly smaller income returns, and also the potential for less price appreciation. This year we saw the average yield of the U.S. aggregate index fall about 60 basis points or so as the Fed cut 3 times. If we look ahead from where we are right now, we think the Fed will cut 1 or 2 more times. And with that sort of outlook, we don't expect the average yield of the ag and most high-quality investments to fall as much as they did this year. So that would likely limit the potential price appreciation for high-quality investments. Now, to get that price appreciation, you'd likely need to see the Fed cut more than expected, but that would likely be due to bad reasons or negative reasons, slower growth or a potential recession. So while you might get a boost with, say, treasury prices, you'd probably see risk assets sell off a little bit there. So kind of be careful what you wish for.
Great stuff. Hey, Colin, we're going to wrap it up there, but thank you so much for all your help this year. Really appreciate it. Colin Martin there. We'll see you in 2026, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll take a closer look at Google after Citizens put out a bullish note on the stock this morning. We'll run you through that. Morning Trade Line will be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Back on Morning Trade Live, let's focus on Alphabet. Citizens raising its price target on shares to $385 from $340, keeping an outperform rating on the shares. The firm believes the Gemini, Cloud, Waymo, and TPUs are medium-term catalysts that should help to inflect results in 2026 and beyond until 2027. That's the focus of the Morning Trade. So joining us now for a closer look is Alex Coffey, host of Next Gen Investing. So we're taking a look at Google Alphabet today. Talk us through this note and what it means now moving forward.
Yeah, good morning, Sam. As you mentioned, Andrew Boone over at Citizens raising the price target from $340 to $385, keeping the outperform rating on the shares. Citizens reevaluated its estimates on Alphabet's earnings as well as the valuation framework that it had on the company after the shares had more than doubled off their May lows. Citizens cite strength in the company's search business for the target boost, saying that Google can further accelerate search revenue in the fourth quarter, and they said that remains the key question for shares in the near term. As you mentioned, they also view Gemini, Cloud, Waymo, and TPUs as medium-term catalysts for Alphabet that should help inflect results in 2026 and 2027. As of this morning, of the 79 analysts that covered the stock, 69 of them, or 87.3%, are in a buy equivalent rating, with the balance, or the 12.7% remaining analysts, or 10 of them, in a hold or neutral equivalent camp. Average price target over the next 12 months, Sam, 336.21, which implies about 7% of return potential if you buy into the consensus thinking over the next 12 months.
Stuff, Alex, we're seeing Google trading just on the line to the upside at the moment. 313 and change. Really appreciate it. I'll talk to you a little bit later on. Let's trade it now with Tammy Marshall, analyst, Elliott Way trader. Very good morning to you, Tammy. Happy New Year's Eve. How are you approaching your example trade for this name?
Happy New Year's Eve. Hey, good morning with Google. I am looking at a call deficit spread with an expiration expiration of January 30th, and the reason that I chose that date is because we have unconfirmed earnings around February 3rd, so I would look for a run into earnings. The strikes I'm looking at for the January 30th expiration are 330 and 335. And earlier this morning when I looked at that trade setup, it was a little bit cheaper, but of course we've bounced now. You're risking 107 to make 393. Now, with that being said, I want the 312 area to hold on Google for me to keep this trade setup. If Google were to continue to fail off the 618 retracement of the swing up, which is around 316, the next level I would look for is 304 to 07, and then I would look for a call debit spread that is 5 points lower, 325 to 330.
Okay, example trade on Google Alphabet for us this morning. Hey, Tommy, just looking at the sort of technicals on this name, and obviously it's one of our best performers as far as the Max 7 is concerned in 2025. Talk us through what you're seeing out there as far as the charts on this one.
Well, so all the moving averages are on the side of the bulls, and that's what I look for. I look at the 5 and 13 EMAs, and the 5 is above the 13 EMA. And of course, I look at the 50 simple and the 200 simple, and we are way above the 50 simple. It's all the way down at 296, and the 200 simple is around 217. On the 17th of December, I had a really nice cluster of support going from 292 to 95. We bounced from that. If that low stays in place, targets from that low are 337 and 349. And because we're nowhere near those targets, I look at this as an excellent opportunity to get bullish on Google.
Okay, great stuff as always. Thanks for all your help this year, Tammy. We're going to leave it there. Happy New Year to you. See you in 2026. Tammy Marshall, thank you very much. Elliot Wade, the trader. Appreciate your time. Coming up, we will take a closer look at the sectors on the move this morning and what's moving markets overseas as well. We'll be right back. Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
What is it that they're getting? A higher rate of change in sales based on their guidance, without saying a rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to the Morning Trade Live. I'm Sam Byers, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. Kevin Hayes joins me to do just that, and there's one arrow direction, and that is down, Kevin. And so we are seeing off the back of a boring day yesterday, a fourth day of declines, all the sectors in the red. Shallow, albeit, but what are you seeing there?
That's exactly right, Sam. These aren't big numbers, but make no mistake, it is a global sell-off. They're hitting just about every sector, all 11 sectors in the S&P 500. Some of them, if you think about this year, Sam, that communication services up 32.9%, information technology up 24.3% year to date, but not today. They're all drifting. Now, we're only at 10:30 Eastern time, so the day's not over yet. The end of the year can still turn as these markets tend to do, but these are thin holiday markets that look like they wanted to drift higher into the end of the year and have simply run out of gas, Sam. So these aren't big numbers. They aren't going to do any serious damage to your portfolio, but make no mistake, all 11 sectors in the S&P 500 lower on the day as of 10:30 Eastern, Sam.
Yeah, as you say, trading volumes are a bit thin on the ground out there, obviously, in a shortened trading holiday week. Obviously, we've had some big gains this year to write home about. So, people have made money in this market, but we are seeing a bit of a pullback now. Not the sort of Santa Claus rally perhaps we were anticipating. A couple of moving parts. Obviously, we've had some initial jobless claims coming through this morning, looking pretty much encouraging, although there are some seasonal factors to consider there. We're hearing some news around NVIDIA and H200 chips. I'm just wondering, what sort of stories stand out to you? We've run through some of the metals performance as well. We're seeing a bit of a pullback there too, once again. So just a roller coaster ride across the commodities patch. What are you seeing?
Well, gold and silver, down again today because for the second time this week, the CMA is going to raise margin requirements at the end of today going into Friday. So another twice in a week, Sam, the CME has determined that the risk levels are too high on a raising margin level. So if you're buying on margin, if you're buying on leverage, you've got to reduce those positions or come up with more capital. Now, the NVIDIA story. I think this is, everyone thinks that this is an old story in NVIDIA, but H200 chips being sold to China going into next year, 2 million chips have already been ordered. Think about that. At $27,000 per chip, Sam, that's $54 billion in new revenue. Remember, what Jensen Wong said in his last earnings call, that's all gravy. That's all extra coming into next year. So, big news. The news Taiwan Semi was higher early this morning based on they need to up production of these chips. So, this China news, very underappreciated by the markets, but significant going into next year. Not only for NVIDIA, but for the U.S. government that's going to get 25% of that.
Yeah, exactly. They get a cut in this as well. I was saying that to KG earlier. There's something sort of in there for everybody right now, perhaps just not Beijing, because, what it wants is not always what Chinese companies want, as we can see through this story. Kevin, thank you so much for that. I'll check in with you a little bit later, but let's check in on how global markets closed out 2025. Europe was mostly low on the final session. The German DAX wrapping up trading yesterday with a strong finish of the year. Traders in London and Paris shutting up shop early today for New Year's Eve. Both markets were down fractionally, as we can see here. Then stocks was the bright spot though on the day in the region. And over in Asia, trading thin on the ground with the Nikkei and the Kospi already out of action. Both markets wrapping up 2025 with solid gains, particularly in South Korea, thanks to the AI frenzy. Traders in Hong Kong also got an early mark today. The Hang Seng Index closed down lower. China's blue chip CSI 300 index also declined, and that was despite China posting strong gains against the greenback in 2025. The Chinese yuan also looking resilient this year in the face of domestic economic pressures and trade tensions. This week, remember, the currency broke through that 7 key psychological mark versus the dollar for the first time in more than 2 years. All right, well, coming up, it's time for Inside Out. We'll get a closer look at software stocks and which ones could outperform in 2026. That's coming up next on Morning Train Live.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech and energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for the stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com. Welcome back to Morning Train Live. I'm Sam Barnes. On the floor of the New York Stock Exchange, let's welcome in our next guest to talk about the software space in 2026. Joining us now, very pleased to say, Steve Koenig, who's the U.S. Head of Software and Services Research at Macquarie. Very good morning to you, Steve. Happy New Year's Eve. Thanks so much for joining us. So, when you do a pulse check on software, is it still beating?
Yeah. Thank you, Sam. The pulse of software is still beating. I think we're set up to, have a pretty good momentum going into 2026. I think we're seeing some positive signs. We track job postings for 40 growth software companies across the space, and job postings have been ramping for throughout Q3, July, August, September, October, and into November. I think that's positive. and I think we're seeing good demand signals out there. So it's going to depend on the performance of each company, how they're positioned, how their AI stories are playing out, etc. But broadly speaking, the space is positioned pretty well to perform.
I love that you're talking about jobs, and I love that there are opportunities out there. I know that we're obviously going to be talking about the performance of software, and you've got a couple of top picks to bring us, but let's just scratch that a little bit, because where are these jobs? What opportunities are some of these companies providing? Because all year we've been talking about the labor market weakness, the deterioration. Obviously, we've seen these huge, high-profile corporates obviously slashing headcount as well. People are fearful. We're seeing that in the consumer confidence sentiment surveys as well. So where are they?
Yeah, that's a really interesting question, Sam. And if I were to generalize, when we look at where the job postings are concentrated, it's tending to be more on the sales and marketing side, not so much not so much R&D and the software development. Companies are getting a lot more efficient there. Maybe AI can bring efficiencies to sales, but I think the catalyst here is, more generally speaking, software companies want to get more people out there, pushing the adoption, especially of their agentic AI products.
Okay, so it's good news then that at least sales and marketing teams are looking to bolster that. No doubt that's going to show up in some of the numbers. Talk to us about some of your top picks here across the sector, because as a sector it has struggled in 2025. Hopefully things will get better in 2026, but you like Autodesk, Datadog, Zscaler, outperform ratings on all those three names. Why those and not sort of the others which you have sort of more neutral ratings on?
Yeah. I think those three names, one commonality among those three names is that they all have leverage from AI adoption, and in particular, a lot of the money going into the investment dollars flowing into these AI native private companies. For example, Datadog is selling more and more of its observability software. This is software that assures the performance of your full cloud application stacks into those AI privates, and so there's good exposure there. I think in the case of Zscaler, you've got a cybersecurity company that is going to be even more in demand in terms of the real-time zero-trust platform and its ability to stop attacks, which are increasingly going to be automated with AI frameworks from the used by the bad actors. And then lastly, you've got Autodesk is a beneficiary. They're actually creating their own foundation models for design. They're the design leader in the architecture, engineering, construction space, and they also do work in manufacturing, product design, and game design with their media and entertainment group. So they can benefit very much from the adoption of these generative models for high-end design work. We're not talking the kind of consumer tools that Google or OpenAI are putting out, but we're talking about bringing automation to design, to architectural design and construction.
So 2025, a bit of a tougher year for software. I mean, as far as the underperformance is concerned, does it start to get better in 2026 as far as you're concerned, with some of the questions in the market right now around some of the capex, the leadership and valuations, the financing?
Yeah, great question. There's some nuances there, and I would say, if you look at a large cap software index like IGV, it's lagged the S&P significantly this year, still up. But we look at a broader index of 40 growth software stocks that we think are better representative of the sector, and that's performed pretty well in line with the S&P this year. And I think the story there, the dichotomy, is that there's been some fear that these large SaaS companies, large cap companies like Salesforce and ServiceNow could be eventually disintermediated by AI from the startups. And I think people are starting to realize that no, actually the SaaS companies, they have the workflows already deployed at the clients. They've got relationships with the customers, and they've got the means to actually drive adoption of AI. They're best positioned to drive this adoption. So I think some of those fears are going away. But broadly speaking, like if you look at design software or cybersecurity or cloud infrastructure like observability that Datadog has, I mean these things are all poised to continue to do well next year and have done well this year.
We'll be watching a good look at the software space. Thank you so much for that, Steve. Steve Penny from Macquarie there. Appreciate your time. Let's trade Datadog now with George Steele, Senior Markets Correspondent. And we've got an example trade for this name, George.
Yeah, I think if you look at Datadog, it's down significantly since it peaked around mid-October, but nonetheless, there seems to be price action that's corresponding or maybe confluent to a rising 200-day moving average. So it looks like that's an area that might provide some intermediate-term support on Datadog. So in this case, with the low volume today, buying some calls outright doesn't make any sense. So what I'm going to do is I'm going to structure a bullish to neutral trade, taking that rising 200-day moving average in mind, which is approximately around $135 in price. So I'm going to go out to February instead of put spread, taking that, like I said, price level in mind. I'm going to sell the 130 put, and then simultaneously I'm going to buy the 125 put below that. So altogether, this structure is designed to earn a credit. In this case, it's around $1.75 a share, $175 a contract. So the whole premise behind the trade is to settle price right around the 130 or higher level. So it doesn't have to make a move for this trade to actually generate that max profit of $1.75 a share, as long as the stock stays above that 130 area between now and expiration at 51 days. If you do structure this trade, you have to consider the risks. Break even on the trade is 128 and a quarter, and then of course the opposite of the $5 wide spread minus the credit is $3 and a quarter, and that will occur at max risk if the stock hits 125 or lower. But again, the technical correspondence at that 135 area matches the probabilities of that 130 strike that I'm securing in this trade. The delta on that trade, or that short strike, is around 35, which implies about a 65% probability of profit by expiration.
Okay, good look at that. Datadog for us this morning, trading at 0.6%, 136 and change today. Thanks so much for that, George. I'll check in with you a bit later on in the day. And that's going to do it for us here. We are, of course, seeing stocks are slipping on the final day of trade for 2025, the fourth day of decline. We've still got the S&P 500 looking with a 17% gain for the year. I'm Sam Vardis. Please download the Schwab Network app, available in the Apple App Store. And tune in 24/7 on schwabnetwork.com. We've got Trading 360 coming up next. I'll catch you later on the Market on Close at 3 p.m. Eastern. For now, have a good rest of your trading day, the final one of 2025. I'll catch you later.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world, I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Good morning. We're now 90 minutes into the final trading day of 2025. Welcome to Trading 360. I'm Alex Coffey filling in for Marley Caden. Coming up on today's show, we got a lot to uncover and discuss. For our 360 spotlight, we're going to dive into the small cap segment. We'll look back at performance that was in 2025 and what's to come potentially in 2026. Let's take a quick look, though, at what the market is doing so far. We do have a little bit of red on the screen as the days roll on. This first hour and a half of trading has led to some additional weakness in the equity markets. S&P 500 is down about 0.4%, as is the NASDAQ 100, the Russell 2000, and the Dow Jones. Basically, all four of the indices moving in lockstep here today with some red on the screen. Take a look at some of the other markets that we watch. 10-year yields up slightly, basis point higher. U.S. dollar index futures in the March expiration just above that 98 mark, so up slightly on the day. Gold continues to bounce back and forth after some strength and a bounce back yesterday, giving back much of those gains, down about $33, $34 in the February futures for gold. Crude oil found a home around 58 a barrel and continues to kind of cling to that mark, just below that now here in real time. Kind of a back and forth ping pong action in crude oil as well. As has Bitcoin, continues to oscillate around 90K as we close out this year. We'll see how close to that mark it can close, but pretty unchanged when you look at Bitcoin futures, all things considered here in real time. For a look at one of the top stories of the day, we welcome in senior markets correspondent here on the Schwab Network, Kevin Green, to discuss arguably the most important stock in markets, that being NVIDIA, in this story around H200 chips and potential demand out of China. KG, what's the latest?
Yeah, we are seeing the shares, fractionally higher. It was actually higher, a lot higher early on in the session, but we are seeing some selling pressure here. This is after two news reports. The first one that I think is probably a little bit more impactful for the company is Reuters is reporting that China is actually looking to purchase over 2 million H200 chips in 2026. Now, NVIDIA's current inventory sits at around 700,000, so it does appear that they're going to ask Taiwan Semiconductor to start ramping up H200 production in Q2 of 2026. Now, Alex, each one of these chips go for around $27,000, so you're looking at around $54 billion worth of value that NVIDIA could see over time, and this could actually be a major driver for top-line growth for this company for next year, especially when you're looking at the latter half of next year. Now, we haven't had this confirmed yet from Chinese authorities that this is going to be able to go through, but this just kind of gives maybe a little bit of optimism that the China trade, when it comes to NVIDIA, could be a positive one, and one that was maybe a little bit unexpected ending 2025 here. So overall, we are seeing a little bit of a positive news catalyst to the upside. There's also a report that ByteDance is looking to purchase around $14 billion worth of chips in 2026 as well. That's something to kind of keep on the radar. So it looks like the demand is still aggressively high when you're looking at a lot of these AI chips, especially coming from China. And the big hurdle that we're going to be focusing on is the regulatory nature of this environment in 2026. And will it actually have any type of impact from a negative standpoint on the company's earnings, as well as for the production of new chips that they work in China?
KG, is this almost as much a TSMC story as it is an NVIDIA story? Because I'm seeing the movement in Taiwan Semiconductor Manufacturing Company is quite more substantial here, 2.25%, as they're the ones who are potentially actually fulfilling this, and this might be almost a better story for them than NVIDIA.
Yeah, I would agree, and they will be the ones that actually fulfill this order if it does come to fruition here. The expansion of their production in 2026 is going to come off the back of NVIDIA spending more money to actually provide that expansion of fabrication technology, if you will, or equipment. So this is going to be a tailwind for Taiwan Semiconductor. Now, when you're looking at this name, to start off, the margins were actually relatively small, but as we get newer generations of AI chips, they are actually making a lot more money on this. So I know that you said that is NVIDIA kind of the most impactful stock. I think it is for the United States, definitely. But if you're looking for the most impactful company in the world right now, it is Taiwan Semiconductor, because 60-70% of these chips kind of go through that company. So this is going to be a tailwind for them, and I'm sure we're probably not going to see any type of negative headlines impacting the AI story and the build-out of AI really kind of impacting TSM in 2026. And if we do, then we have a little bit of a bigger story for the broader equity market as a whole.
Good stuff, Mr. Kevin Green. We wish you a Happy New Year, and we always appreciate your insights going through one of the big stories of the day, kind of hiding in this final trading day of the year. So we say goodbye to KG, though. We welcome in our next guest, and that's David Wagner. David, of course, the head of equities and the portfolio manager for Aptus Capital Advisors. First off, David, good to see you. Thanks for taking some time to join us here. Final trading day of the year. Quick thoughts on 2025 as we close the chapter and look ahead?
Yeah, Alex, thanks for having me. By the way, Alex, about a few months ago, you gave me probably my favorite line I've heard all year, and it's a great dichotomy of actually, what happens in 2025. You're like, hey, if you are betting on risk assets, you want growth. Because it's not like everyone was coming on your show before saying, hey, you know what, we're expecting some rate cuts that are going to do your risk assets. You're like, whoa. At the end of the day, like, if you're betting on risk assets, you want growth. And that's exactly what we had in 2025. And it's exactly what I expect the market to have in 2026. I mean, I would say that the one thing that the market got wrong in 2025, I think everyone said that the market was still very, very concentrated. And I very much disagree with that. If you look, more international, more on the EM side too, basically KG's point talking about Taiwan Semiconductor, you actually saw a barrage into the market, not just domestically speaking, but internationally speaking. I think that, caught a lot of people by surprise. I think that's more of a currency translation play. There's more of a valuation play than a growth play on the international side. But, as we head into 2026, I expect to see actually more growth in the United States than international.
Yeah, Dave, I appreciate you saying that. I think it's we're all prisoners of the moments that we kind of grew up in, and over the last decade and a half, this zero interest rate environment has really skewed, I think thoughts around what interest rates and the relationship between interest rates and the growth environment are. Historically, interest rates are correlated to growth, and typically higher interest rates are actually higher growth times, and typically those are the best times for stock markets. So perhaps in this non-zero interest rate environment, we should remember the histories of the past more. But I will look ahead now to 2026. You talked about expecting more of the same. I think oftentimes that's a good place to start. The economy doesn't just look at it differently because we're in a new year. It's just more of the same, at least to start. But as you look ahead, where are some areas of the market that have caught your eye?
Yeah, so at Aptus, we're based out of LA, United States, for Lower Alabama. So we do things a little bit differently at Aptus. And when we come up with our market outlook, which I just released last week, we always do it very thematically based. 1980 movie Airplane, which we were basically calling out that the market was going to be seeing more tails in the future, left tails, which are the bad tails, right tails, which are the good tails, and we definitely saw that in April, and then really since April 8 we've really seen a right tail. But heading into 2026, our team is based off of a 2000 movie with the star being Patrick Bateman called American Psycho, and our big thesis here is that we want to be psycho about American stocks. You know, I just spoke about how the international's done well in 2025. I don't think we're going to have the exact same tailwind that boosted those stocks in 2026. So I think we got to hone in our attention more towards U.S. domestic stocks kind of being one of the main places to see some type of benefits to risk assets moving forward. But if you crunch down more into the depths of U.S. stocks, I think it's still very much hard to bet against the Mag 7. They have that core tenet of operating leverage, which really, no one else in the market has. Small caps don't have it, and international doesn't have it, EM doesn't have it. Like, so it's very hard to bet against the Mag 7 right now. But Alex, what I would do with that is I'll barbell that with actually small caps. I love small caps right now. I think they're very cheap from a valuation perspective. Historically, they traded a 4% premium to large caps. They're trading at a 30% discount. I would say it's kind of re-rated lower, and I don't think anyone's seen the forest of the trees and the valuation to the average stock and small caps. But I think given the amount of fiscal stimulus, monetary benefits, I think it's really hard to bet against the domestic economy, and the biggest beneficiary would be small caps.
Couple things. First off, I really appreciate this approach because one, it really ties into kind of my style of explaining things. I think anytime you can use an analogy or something people understand from a simple standpoint to explain something complex, it's a really good way to get what you're trying to accomplish across in communication. But two, I think if this year has taught me anything, at least in the equity world, the story and the narrative is above all. I mean, look at the tariff situation. The fears around that drove intense volatility, but reality was nothing really changed. It was, there was policy implemented, but reality is the world went on, and there was subtle differences. The pricing fears were often overblown, and once that was realized, the market was able to turn around. So for me, equities and story and narrative are above all. If you're a numbers guy, fixed income might be your place. But let's talk about some of the numbers and some of the stats that you had, because I was pretty fascinated in some of the things in your notes here regarding kind of those tail risks that you were talking about in both directions that we've seen over the last few years.
Yeah, tails have always occurred more often in the market than what we would assume. If you go back to 1950, Alex, let's just say the average return of the S&P 500 is between 7 and 9%. There's only been 4 years since 1950, so 4 of the last 75 years where you've seen a return to the S&P 500 be between that 7 and 9% range. If you actually want to broaden the scope there, going back over the last 100 years, if you bifurcated a down market in the calendar year or an up market in the calendar year, and if the market was down in the calendar year, it's down 13%, and if it was up in the calendar year, the market was up 21%. So the market has always seen tails. But to your point, Alex, like what we saw back during this tariff tantrum in April, that was more of a growth scare than anything. So that kind of ties into the operating leverage, that core tenet that I always talk about and on your show, and actually just a few minutes ago, was that, there's economies of scale, they can work for you and they can work against you. And that's what's going to cause even more tails occurring from a frequency perspective and a magnitude perspective moving forward. And I think the biggest point that I can show there, like Alex, one thing I always try to teach our analysts and a lot of our clients is that you have to follow the tape and you trust in what the tape is telling you. Everyone wants to fade the tape, fade the market because they think the market's wrong. At the end of the day, the market's always 100% right. It's the final arbiter. But, if you go back to 1942, the market tends to see 20% pullback every 5.5 years. Well, I am a numbers guy, but if I carry my one here out, so 5.5 years, or just over 5.5 years into this decade, we've already seen 3 20% pullbacks. We saw COVID, we saw the interest rate debacle of 2022, and the tariff tantrum of 2025. So we're definitely starting to see more left tails occurring, but I also think that, there's an underappreciated part of the market that right tails also occur, and I think you have to be, position your portfolio, not just prepare for the left tails that should occur more often moving forward, but you also need to prepare yourself for more right tails occurring in the future.
David, real quick, I don't got a lot of time, but I saw some thoughts you had on the AI bubble fears. If you could give us the elevator pitch on how you stand on that'd be awesome.
Not worried about it at all. Could there be an air pocket? Absolutely. I think there's good bubbles and I think there's bad bubbles. The dot-com bubble, it stunk. It was terrible to live through. I'm not like an 8 cents, maybe I did it. But the thing with the benefits that we had from the dot-com bubble, that we had Uber, like till 12. Like, there's a lot of benefits to come out of the dot-com bubble that stunk at that time frame. Like, could we see an air pocket in the AI chip? Absolutely, but I think, again, we need to look out way far into the future and how this economy is going to evolve from this, newfound technology, more of a revolutionary technology than evolutionary technology.
Good stuff. David Wagner, always appreciated, the head of equities and portfolio manager at Aptus Capital Advisors. Happy New Year. We'll catch up soon. Gonna take a short break. We get back. It's time for the Big Three. We're going to be joined by Michael Shore as well as Rick Ducat. We'll look at the technicals and some example trades in Uber, Intel, and Occidental Petroleum right after this.
Trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
Look it up here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trade 360. It's time for the Big Three. I'm Mouse Coffee. 3 stocks, 3 charts, 3 trades. Rick Ducat, of course, is here, lead market technician for the Schwab Network. We're also joined by Mike Shore, Director of Trading Education for Prosper Trading Academy. Mike, let's get a big picture thought here. 2025 is coming to a close. What did you make of the year? What's your big picture thoughts for next year?
2025 was kind of a weird year. Just kind of oscillating. I think that 2026, I think that we're going to see. I'm very bullish, and until I'm proven wrong, I've been saying all year long, buy these dips, no matter when they come, buy them, and then be wrong if you're wrong. But it doesn't pay to be a bear in this market.
Well said. Let's talk one of your stocks. First one on the list is Uber. Looking for a potential breakout trade here. What are your thoughts on Uber?
Yeah, I'm looking at something that it's below its 200-day moving average, which you would think that they would be kind of leading the pack. And so I'll take a cheap shot to the upside. I'm not looking for a huge move, but above 82.5, which we're a little bit below right now, but above 82.5, I'd like a calendar spread targeting that strike, which is just below the 200-day moving average, and you can buy that for 40 cents. The 9th versus the 16th, 87 call calendar. You can buy that for. If we get up there, 40 cents. You're risking 40 cents. The way that I have it modeled out, you're looking at 75 to 80 cent profit.
2-to-1 risk reward on that if it kind of plays out as you're saying. Hold those thoughts though, Mike. We'll get to your next thought in just a second. I got Rick here. We're taking a look at the chart. So he's looking for the breakout. That breakout being triggered by an 82.5 sort of, I guess, trigger point. Rick, when you look at these charts here in Uber, what do you make of it?
Yeah, boy, it should be a busy night for Uber drivers tonight, first of all. Should be an interesting situation there. But when we look at this chart, we can see that the breakdown that happened recently occurred at an important point, that level near 82. We can see this old high that we established here then became a significant low point here, a repeated floor for price activity here. After it was breached, this old support then more recently has become resistance here. So we can see that this level 82 stands out. We can also see 77. That was another set of old highs back here. Then to the upside, our relative high point here, our high point during our decline here off of these highs near 102, that comes in near about 93. So 92.76 was the high, so that would be the next potential stopping point here during this rather sharp decline that we've seen recently. When we look at our moving average studies here, we can see our exponential moving average, our weekly 5-day EMA here in this blue color, that comes in right around 81.60. Our medium monthly teal EMA is crossing below our longer-term yearly EMA there in orange. So these are signs of potential trend degradation, of potential bearish shift here. However, we are holding the line right around this supportive area. We could recapture it. Things are perhaps just slowing down as we head into year's end here. RSI was a bit better than you might have expected here during our declines. We did see a little bit of bullish divergence in momentum here, so another potentially positive sign. Finally, when we look at our volume profile study, we can see that the point of control, the heaviest trading area of all, comes in right here, this thick red line near 91 or so. We've also got significant volume pockets here near 84 or so, 83, 84, and down here near around 75. So those are areas that stick out as potential congestion points.
Good stuff. As we go back to Mike, we take a look at Intel. What a year it was for Intel, Mike. When you look at this name, what stands out?
Yeah. Bottom finding. Bottom feeding. That's what I'm looking at here in Intel. I want to see us break out above this 38.26. 38.26. The implied volatility is ridiculously low for something like this, which means that the market thinks that the bottom is probably in. And so if I can do the 41.44 call spread for 40 cents, I'm risking 40 cents, and then I can make 270. I don't think. I think the bottom's in on this, and I think on top of it, and I'm not a big fundamental trader. I understand that there are people that are paid a lot more than me to let's just say cumulatively. There are rooms of people that are looking at this, but I think that again, reward to risk. And I like the upside here in Intel. I didn't think maybe in the middle of the year I'd be talking about that, but I certainly am right now.
Yeah, and looking at this example, looks like it's a call debit spread, Mike. Similar risk where you're risking that $40 like you were in Uber, but a little bit more max reward, that risk reward, 6.5 to 1 as structured here. Similar style swing breakout setup, looking for that trigger price around 38.26. But We'll take a look at the chart here as well as we pull back in Rick. So very different looking chart, Rick, when you look at the performance at Intel, really ramping up in this second half of the year. We actually looked at this one just a couple days ago, but talk to us about the setup here.
Yeah, an interesting situation here. We've got an upward channel type shape, and oftentimes after you have some notable gap up, like here with when we saw this involvement from various areas into Intel, we had this low point that came after the gap, then our subsequent lows lined up here. You can duplicate that line and put it across the high. It matched up decently here. What you're looking for is kind of a line of best fit as best you can do it here. Sometimes the subjectivity of this kind of analysis kind of irritates people because it's not very exact, but what you're looking for is general ranges and general areas of potential support and resistance, especially when they line up with other areas. For example, 36, our darker green line here, you can see this was a high point and then subsequent low points repeatedly. It was then high points after a breakdown. Now it's become supportive. Now it lines up with the trend line here. So you kind of see that now 36, as we kind of put these two things together, stands out even more as a potential area like the make or break point. Just below that, we have our double bottom here near 33, our notable low point during our rally. That's once again where the bulls held the line. So now if we were to look at our moving averages here to get a feel for the trajectory of the price activity, for the most part converging kind of sideways here, we can see our moving averages are clustered together right around that lower trend line between about 36 to 37. RSI moving to the upside, downward trend line has been broken much like price, but we have not had the crossover above the 50 midline that would suggest more of a bullish shift. Finally, when we look at volume profile here, you can see that the shaded areas line up with the heavy trading activity zones here. 37, 36 to 38 really would be a better way to describe. That's where the heavy area is. If we were to break above the next notable point, right here, you can see this smaller peak near 40 is the obvious heavy trading area. Then, if we were to move lower, right here, 31, 30, 50 or so, 30, 30, 50, that's the last holdout before we would be looking to perhaps even fill that gap or test that gap.
Good stuff, Rick. And we go to the final stock here of the big three. We bring back in Mike, and we're talking Oxy, which is only fitting, I feel like, Mike, on Warren Buffett's last day that we go to one of his recent favorites in the last couple of years.
That's kind of why I did it. And you know, I've been bearish on energy for, I don't know, the last 3-4 months. At some point, there's enough going on in the world, and I don't like to look at things, you know, and trying to predict the future. But this is a stock that probably should be higher, and there's a lot of fundamentals behind it. There's a lot of things that can go on in the world, and we're at a value point. If we're wrong, we're wrong. Remember, I'm a trader, not an investor. This is not investment type of advice. But I think that we have a shot to the upside in energy in general, and I was looking at Oxy, and I think that that's probably a good place to start.
And we'll get that trade in a second. We'll get the chart here on this one. As you mentioned, it's been kind of in the dumps here, Rick. What are you looking at on Oxy's chart?
Yeah, so when we look at this one in particular, we find ourselves near another important low point that we just rallied. 39, our green line here, that's about where we bottomed out. Backtrack over here, that was also where we kind of hit the bottoms after the crazy turbulence from the tariff news event shock happened. That's when we started to solidify here. Now on the verge of breaking out above our channel. Our moving averages that we follow are starting to shift upward. The faster ones are starting to outpace the slower ones. Meanwhile, RSI has made a bullish crossover above the 50 midline. So look for the 63 EMA, the quarterly, near 42 to be potential resistance. Finally, our volume profile shows the point of control right here, around 42.60 or so, above 43. Things thin out, then they pick up again, notably here near 46.
Good stuff. All right, guys, we got to run. We wish you a happy new year, Mike Shore, and we can't wait to talk to you again soon. Director of Trading Education at Prosper Trading Academy. Happy New Year to you as well, Mr. Ducat, lead market technician here for the Schwab Network. We'll take a short break. We get back. It's time for the 360 Spotlight. We're going to be looking at small caps right after this.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions for moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Mouse Coffee filling in for Marley Kane. It's time for our 360 Spotlight, which will be on small caps. Joining us now is Nathan Moser, the Senior Portfolio Manager for Impacts Asset Management. Nathan, almost Happy New Year. Thanks for joining us. What do you make of the year, especially within small caps, that things started to broaden out a bit towards the end of the year?
Good morning, Alex, and almost Happy New Year to you as well, and to all the viewers. It's been a good year for small caps, especially over the last 6 months or so. We've seen them start to outperform their large cap counterparts, and we expect that broadening theme and that broadening trend to continue in 2026.
And as you look to 2026 and all the excitement around potentially a Fed easing cycle, productivity gains, technological advancements, what stands out to you as these catalysts for potentially more potential strong performance for small caps?
Yes, I think it's important to remember that small caps are economically sensitive. So to be positive on the asset class, you have to be positive on the U.S. economy. We at Impacts are. Consensus expects GDP next year to be about 2%. We think GDP will actually surprise to the upside, and a lot of that is based off the fiscal stimulus that's coming. We're going to see a very strong tax refund season that's going to benefit middle and lower income consumers who are inclined to spend those refunds. We're also going to see continued monetary stimulus. We've already had some Fed cuts over the past year. We expect additional cuts, and so both of those are going to buoy the U.S. economy and, by definition, buoy small caps, and we expect very strong earnings growth. So, for example, the Russell 2000 will likely see 50% plus year-over-year earnings growth. A little less for the quality small caps, but definitely a positive year is our expectation.
Nathan, talk to me a little bit about that kind of strategy, and as a small cap investor, the importance of finding the right themes, the right names. we always are citing and quoting the Russell as that benchmark for small caps, but such a big index, so many companies that are, not necessarily cash flow positive or earnings positive. What approach do you take, when trying to outperform within small caps?
Yeah, excellent point. So the Russell 2000 is a lower quality index. Anywhere between 30 and 35% of companies don't make money. And so investors really need to be selective. The strategy that I manage emphasizes higher quality small caps. So we're looking for profitable companies with good balance sheets, strong management teams, companies that will deliver very strong free cash flow growth in the future. That's not saying that companies that don't make money, there aren't pockets of opportunity. One of those pockets is likely within biotech. We've seen biotech really surge higher over the last 3 to 6 months. We expect that theme to continue. But the areas that have caught the attention of some investors, whether they be quantum computing stocks, Bitcoin mining companies, those are companies we tend to steer away from.
I saw on your notes you got a couple maybe stock picks within that pharmaceutical biotech world, maybe for our viewers to take a look at. You want to go through those?
Sure. So Pacira Biosciences is very much a definition of a value stock where investors are focused on short-term headwinds related to their lead drug, Exparel, which is a non-opioid pain relief product used primarily in knee surgery. This helps physicians and patients avoid using opioids to the extent that it may be addictive. That drug is facing some generic patent challenges from a few competitors. As a result, Pacira trades at 7 times earnings, still is delivering very strong free cash flow growth, has a couple other products on the market, and one very exciting gene therapy product in the clinic that we expect over time investors will come to appreciate to a greater extent. Maybe the last point on Pacira, the management team is relatively new in terms of their CEO. He's doing an excellent job with respect to capital allocation. Right now there's $200 million available for share repurchases, which is almost 20% of the market cap of the company. So we think in time, these shares have material upside.
I also noticed you're looking at SI Bone, and maybe not a company I was familiar with before, maybe I should be, because I got to the age where I've discovered the SI joint pain just recently in 2025. Walk us through this one.
Yeah, so it's a very interesting company. We've known this company and management for a while. As you alluded to, the SI joint is a big driver of lower back pain. That's an issue that affects many folks out there. They have, over the past few years, expanded that product offering from just addressing the SI joint and fusing that joint to relief pain to broadening out the product portfolio. This story right now I think is very timely. There's incredible fundamental momentum in the business. We're seeing surgeon adoption in the high 20% rates on a year-over-year basis. It's a 20% plus revenue grower in our opinion. Has just broken over to free cash flow positive. We think earnings inflect higher in the out years. And maybe just the last point on SI Bone, I've been looking at medical device stocks for the better part of the last 25 years. And in my view, many of the great med tech companies are eventually acquired. I don't think that outcome would be surprising for a company as high quality as SI Bone.
Really good stuff, fascinating, and I think a lot of really good insights in there, Nathan, on how to look at small caps as a universe and potential ways to look for that outperformance in such a dramatically diverse set of stocks as a group. But Nathan Moser, I wish you a happy new year, and we'll catch up soon. Senior Portfolio Manager for Impacts Asset Management. Coming up next, it's going to be our Disruptors segment. You won't want to miss it. We'll be joined by George Tillis. Get an example trade from George and take a look at, you guessed it, Tesla right after this.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using a chart when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Turn 360. I am Alex Collins filling in here for Marley Caden as we go out to the New York Stock Exchange. We're joined by Cole Patlides for a quick market thought and some Netflix news. Let's start with the market thought, Cole. Good to see you again. Only 10% of the S&P 500 names that are higher, but it's like dramatically unchanged out there. What are you seeing?
Look, I mean, I got to talk about Nike, which has been a leader. It wasn't too long ago we heard that Tim Cook was buying into Nike. Now it's the leader on the S&P 500 today because we have CEO Elliott Hill who bought in. You know, this is the insider buying. People watch this so closely. Bought $1 million worth of shares. I mean, Nike has been on an uptrend since this last earnings report. And so we have seen it moving higher. Right now it's at 3.8%. So that's a story stock there. Melina Hill, Lamb Weston, those are some of the other leaders. NVIDIA has some good news. We have chips to China, over 2 million chips. ByteDance interested in NVIDIA chips, so that was good news. Also Tesla, Cybercast, some updates there for Elon Musk, so positive news there. I had to give a deep on. This was such a great guest, and he picked Pfizer, Diageo, United Health, Ted Weisberg came on. He continues to love the airlines like United Airlines and American Airlines and Chubb. Bank of America was a name he liked, and Meta. So it's fun to hear stock picks for 2026. I mean, there's no doubt we saw so many great winners and leaders. Some were surprises and some, you know, maybe not so much. But things like GE Vernova, and I was looking at a few of the GE Healthcare. There's so many, some of the old school names that have been doing so well. And of course, we're going to continue to watch the big story on who gets Warner Brothers, if at all. That continues to be a leader.
Yeah, Nicole, is that the Netflix story here? They're, you know, in this battle to try to get Warner Brothers, HBO. It's exciting, but it seems kind of like it's getting a little messy out there.
Absolutely, and I'm going to get to that in a second because do you know that Poly Market now has an 8% likelihood that nothing happens by 2027, June of 2027. Okay, that's a very small chance, but I'll get to that in a moment. I do want to talk about Netflix. Folks rewatching Netflix on Christmas Day. Stranger Things was the #1 thing watched in the world globally on Christmas Day. Season 5 had 3 new episodes. The whole world was watching Stranger Things. And the 2 NFL games, the Dallas Cowboys, Washington Commanders at 1 o'clock, then there was the Lions versus the Vikings at 4:30. The third game was on Amazon Prime. But if you wanted to watch those 2 NFL games, you had to be a subscriber of Netflix. So it looks like Variety's reporting that Netflix had its highest viewership ever on Christmas Day. They don't actually give the numbers, but Variety is leaning towards that. And this could give a boost to Netflix and even AMC theaters and Cinemark theaters, which were also streaming. So some of the Netflix, you know, Stranger Things and all that. So big deal for Stranger Things. We did get one number, and that was over 34 million people with the viewership from December 22nd to the 28th. So it's a little wider range.
No,
but when you look at what's going on with
always
Netflix,
something,
that's
boy.
the laggard of the 3 when it comes to Netflix, Warner Brothers, and Paramount Sky. In fact,
Silver
over 6
can't
months
do
it's
nothing,
down
boy.
30%. Warner Brothers has
Just
soared
always
because everybody's battling
can't do
for it.
nothing.
That's up almost 160% in 6 months.
Man.
And Paramount Sky is
Yeah, hurry up and give me my money back.
5%. I got to double check.
Silver ain't worth a quarter.
Yesterday we got some news that it looks like Warner Brothers once again will reject the Paramount Sky bid, even though now they have the backing of the Ellison family, and they said that the Netflix offer was just superior, and maybe Paramount Sky thought that having the backing of the Ellison family with the guarantee and the promise that they will see it through should be enough, but apparently it may not be, and the Warner Brothers board will meet next week. Alex?
You know what my takeaway is, Nicole? The NFL and Stranger Things is quite the twin-headed monster there in terms of getting eyeballs on the screen. Fascinating stuff. Happy New Year. Look forward to another year on the Schwab Network. As we say goodbye, Nicole, we welcome in George Tillis. George, we're talking Tesla. A couple things. Nicole mentioned the Cybercab production. We also got Michael Burry, stirring the pot again. What stood out to you here in Tesla?
Well, I mean, I'm looking, at the price action. If you look at, 20-day, 1-hour charts, the stock made a nice move from around the $450 area, almost to 500, which is basically a near all-time high, and it broke out slightly, and I say slightly because it retraced back on the 19th based on the full self-driving, no occupant, no assisted driver occupant in Austin, and they're going to be potentially rolling out the no occupant driving in other major cities. But since then, the stock has fallen, and one of the challenges with breakouts is you have to see with strong volume, and that wasn't the case going back to the 19th of December. So since then, it's pulled back, and now I think that the stock is resetting. There's obviously additional news associated with the Cybercab ramp up that Elon Musk is predicting coming up in April. There's also always been valuation concerns and even safety concerns around, the software and full self-driving. And even Michael Burry's in the mix right now, and he's in the mix with a lot of names, which again have very high multiples. Companies like Palantir, for instance. It is the case if you look at Tesla. With a trailing earnings of $1.45 a share, it's trading around 313 times last year's earnings, or trailing earnings. And even next year, if you look at the EPS estimates of $2.22, it's trading at 205 times next year's earnings. So, again, Michael Burry is known to be a little bit more critical on stocks. Sometimes he's early, sometimes he's not. But, there's some points that he's making that make sense based on valuation and the heightened expectations that eventually full self-driving will become a ubiquitous licensed software across not just Tesla's platforms, but all automakers globally.
That said, he did say he's not short the stock, so kind of that hot, stove. Maybe he's tired of touching that hot stove. But you got an example trade here for us, George, that's a little bit more in the neutral to bullish camp.
It is. It's kind of conditional trade because, again, if you just look at, like I said, a 20-day chart, it's retraced the entire move the last 3 weeks. Delivery numbers are coming up, I believe, on Friday. Expectations are quite low at around 422,000 units, 15% year-over-year. So, point is that, that might be an underwhelming estimate. And so if they beat these numbers, we could see a pivot back to the upside on Tesla. So I'm going to place a trade conditioned upon looking at price action, which is very volatile at this stage. You have to be mindful of that. That the retracement of the stock price may come down to the 50-day moving average, which price-wise is approximately the 445 area. So I'm going to use that as a potential pivot point. In the next 16 days of the January expiration, I'm going to sell a put spread 445 short, 435 long put. Altogether, you're harvesting around $3.50 a share, or $350 a contract. So the whole premise behind the trade is to hold the 445 between now and expiration of 16 days. If it doesn't hold that, you have to consider break even, which was 441.5. And of course, max loss in this trade is $6.50 per share, and that only occur if the stock hits 435 or lower by expiration. So not too much time in this trade. The premium is quite robust because volatility premium is still inflated, so it's really a play on coming in ahead of estimates on those numbers and a potential pivot retracement back to the upside slightly, at least in the next 16 days.
George Tillis, appreciate it as always. Tesla, the disruptor of the day here on this final trading day of 2025. We're going to take a short break. We get back 360 round time. We'll look back and ahead at Microsoft as well as the AI trade and innovation that's happening. We'll be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for the stock.
Certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back. Time for our 360 round. Joining me now is Ron Westfall, VP of Networking and Infrastructure at Hyperframe Research, and Evan Fagans, Portfolio Manager at TCW. Evan, Microsoft, the topic of discussion, big name player within this AI innovation. What did you make of the year that was in 2025 for all things Microsoft?
Yeah, I think 2025 was really defined by a fraying relationship with OpenAI. They were contributing a lot to growth, but everyone views it as unsustainable. They saw that OpenAI wanted to distance themselves from Microsoft, and people weren't able to underwrite the business with confidence. So I think now going into 2026, we actually have more confidence. We got that deal in October, and we can start to look for other sources of growth in AI. And continue that growth trajectory.
Ron, you, like many, see Microsoft as sort of the center of this enterprise AI super cycle. As we head into 2026, what's the setup? What's your outlook for the company financially as we turn the page on the year?
I think fundamentally that is correct. Microsoft is looking at a very robust 2026 overall. In fact, I concur that the fiscal 26 revenue projections of around $327 billion will be achieved. And that is, again, supported by that multi-year $250 billion deal with OpenAI, even factoring in the fact that OpenAI has become more diversified in terms of its partnerships and so forth. And what's really driving this is the fact that Azure, its cloud platform, is looking at maintaining growth of nearly 40% in 2026. And so this can actually be a contributing factor toward Microsoft achieving the $5 trillion market cap plateau in 26. And I think these will also be reinforced by the fact that over 90% of the Fortune 500s using the Copilot capabilities as part of their overall Microsoft enterprise platform. And so that's going to give Microsoft, I think, a strong competitive advantage in countering the moves by competitors like Google to expand its workspace and Gemini capabilities, as well as being able to maintain the margins necessary to sustain the CapEx, which it will hit a record $125 billion in 26. So all this is pointing toward Microsoft having a successful 2026.
And is it still, if you're trying to assess metrics, you're looking at the earnings, does it still begin and end then, Ron, with the Azure growth rate as it has it seemingly for the last couple of years?
That will be a major contributor. And yes, there are other factors that are going to enable Microsoft to maintain these financial milestones. The fact is that they are effectively countering Oracle and SAP when it comes to enterprise software. So their ERP business is going to be solid, as well as the fact that they are able to maintain, I would say, a competitive, advantageous position throughout the enterprises. And so this is the reason that's going to underscore their ability to take advantage of this AI enterprise supercycle, because many enterprises are going to be moving on from kicking the tires and doing pilot projects and monetizing their enterprise AI implementations. And so all this is going to contribute in addition to the Azure cloud revenue stream.
Evan, as a portfolio manager, you're making the tough decisions on where companies like Microsoft can fit in a portfolio. I imagine it fits in there, but how do you approach it relative maybe to your peers, and where you guys are seeing Microsoft as a member of any portfolios you guys are structuring?
Yeah, we own it in our AI thematic portfolio, AIFG. I think it is, as Ron mentioned, has a very strong position in the corporate AI adoption. And really, I think that is the key. Corporate adoption has lagged thus far in AI, and I think it's the next leg of growth. And Microsoft, if you look at their Ignite conference last month, they really have the strategy in place to unlock AI spend. They're not necessarily focused at the model layer, they're focused on what they call the scaffolding, the permissioning, the security, the agent orchestration layer, and really unlock company data and make AI useful for more companies. So I think they're really in a place to drive widespread AI adoption going forward.
Ron, real quick, coming back to the Copilot discussion, how important is it not only for Microsoft, but really all of these AI software makers that a company like Microsoft is able to use their Copilot system as sort of a pilot, no pun intended, for so many of these big companies that move a little bit slower to kind of dip their toes in AI?
It's going to be a major factor. It's going to impact the entire competitive landscape when it comes to enterprise AI. And it's not just the co-pilot capabilities, using generative AI to enhance, say, productivity and streamline workflows and so forth. It's also about transitioning to agentic AI. And this is where I see Microsoft having, again, an edge in terms of being able to use Copilot to transition these enterprise customers to use what is characterized as agent mode. That is, using Copilot simply more than as a chatbot, but to also use it as an autonomous worker that can execute many intricate business workflows. And so this is going to be a major pivot in 26, and this is where Microsoft can not only strengthen its competitive position, but use Copilot to, again, expand its influence and revenue streams across the enterprise AI realm.
Ron Westphal, Evan Fagans, I appreciate both of you guys taking the time here on New Year's Eve. I wish you guys a Happy New Year, and we'll catch you up soon. That's going to do it for us, though, today here on Trading 360. I'm Alex Coffey. I wish everyone a Happy New Year, and we'll see you in 2026.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app. and stream live coverage wherever you are. This is Schwab Network, and we're so glad you're with us. It's noontime right here on the floor of the New York Stock Exchange on the corner of Wall and Broad. It is the final trading day of 2025. Amid for my friend Diane King Hall, taking a look at markets. Many traders are here to sing their traditional "Wait Till the Sun Shines" Nelly song that they sing every year. So it's a busy day here on Wall Street, and a fun one at that. In the meantime, it's a full day of trading and down arrows once again. What Santa Claus rally for the third year in a row. The Santa Claus rally is not showing itself. No jingle bells just yet. The S&P 500 down a quarter of 1% at 68.80 right now. The Dow Jones Industrial Average down a quarter of 1% at 48,244. The Nasdaq is down 62 points at 25,400, and the Russell losing about 0.4%. On the roadmap of today's show, we'll have example options trades for Palantir. And our team from Lightfolio, well, they're going to take a look at Apple, the latest sentiment data there for Apple. And of course, we'll break down AMD. That's a winner, up about 80% this year. A lot of names to watch, and it's been a winning area on Wall Street. The S&P is up about 17%, the Nasdaq up about 21%. Right? So we're not hitting highs this moment. I think people will take that anytime. In the meantime, we've got the roadmap for today's show of Trading Action. I bring my co-host, Kevin Hayes, joining us live from CBOE, and Joe Mazzola, head trading derivative strategist at Charles Schwab. Great to see you both. Thank you so much. Of course, we're going to be taking a look throughout this hour on some of the biggest stories of this past year. And think about what you remember or what stands out. Kevin, I'll start with you and your thoughts.
Hello, Joe, and hello, Nicole. You know, I think this is a year that we're going to think about big things, right? Year started off strong. April and that area around early spring was pretty horrific and violent in terms of the sell-off, and then a big, long recovery into the spring and into the end of the year as, you know, the overall AI trade just completely took over this market. But, I mean, you can think of this year in terms of NVIDIA, right? NVIDIA started the year strong. In the April, sell-off got down to the mid-80s and then hit $215, $212, $215 near the end of the year, and now a bit softer into the end of the year, though one of the stocks up today. And even though all 11 sectors of the S&P 500 are down right now, I mean, many of them, communication services up 32.9%, information technology up 24.3%, industrials 18.7%, financials 14.1%. It's still going to be an incredible year for overall stocks in general, Nicole and Joe.
Yeah, third year in a row, right? I mean, who would have thunk it? And, you know, what does next year bring? I mean, a lot of folks are scratching their heads, but in the meantime, with all the things that were thrown at this market, the resiliency was unbelievable. Joe Mazzola, your thoughts?
Yeah, I think it's the year of the retail trader. You know, Kevin mentioned what happened in April with the Liberation Day and how markets kind of fell out of bed. And yeah, it did seem at that point, you know, markets could go one of two directions. They could continue to go down, or you might see some buyers step in, and that's what we saw. And what I think was most telling to me was that who led that charge, and that was the retail trader. You know, it took a while for institutions to kind of get involved in that buying game. They probably got in around late May, but, you know, it goes back to that time in the market is better than timing the market, right? Because by by purchasing in April, they get that nice little leg up before the rally continued to broaden in May. And I think it's been the story all year. The story all year has been retail buys the dip, they sell the rip, and I think that is something that has done well for that cohort. When we look at the stocks that have been the most heavily bought throughout the course of the year, being Palantir, being NVIDIA, you would put Broadcom up on that list. And we always talk about the Mag 7, but look at the Mag 7 year to date, 26%. Those are great numbers, and I think anybody would consider that a good year. But going back to last year, it was 60%. Going back to the year before that, it was about 105% in terms of the Mag 7 year to date. So you're seeing a broadening, and if you think about the stocks that did the best this year, SanDisk is number one. Anything that had to do with storage, whether it was Micron in chips or whether it was Western Digital in terms of storage, and SanDisk in terms of storage, those stocks did extremely well, up 200%, 300%, 500% for SanDisk. So there was a broadening in terms of where investors were looking to allocate those funds. I think that was important, and I think we've looked at other sectors that have performed very well too, as of late, financials being one where you really started to see a breakout. A lot of that I think has to do with the steepening of the yield curve and what we've seen recently, but metals, they've done extremely well. Materials, these are all different sectors that, had you asked me at the beginning of the year, would I think that you would see that some of those sectors would perform as well as they had? Probably not in April. I wish I could have told you back in April, to go ahead and buy silver and gold and buy SanDisk with two hands. But at the same time, it was really interesting to see how that all played out.
Look, I mean, every time we've had a dip over the last 3 years, if you were buying, you were a winner. Think about what happened back in COVID, too. I mean, then Liberation Day, and, the people who are willing to take that risk and buy on those dips really do very well and have done so over decades. Sometimes you have to wait, though, and so that's the risk part that's involved. A name like NVIDIA has had a nice run. It's gone from $86 on the low end in the spring at that April Liberation Day up to $212 right now at $189. And we've had good news even today on NVIDIA. Ship more chips to China and ByteDance interest and stuff. When you think about NVIDIA and the AI trade, Kevin, is NVIDIA still the leader? We know Dan I said it's NVIDIA world and everybody else is just paying rent.
There's so many things going on with NVIDIA right now, it's hard to get them in. We could just do the NVIDIA show every day. We could actually rename Fast Market, but today, the orders coming in, 2 million chips ordered from China. Remember, Jensen Huang said in his last earnings call, anything from China is gravy. That's all extra. 2 million chips at $27,000 per chip is $54 billion in revenue. That's additional. The calls for Taiwan Semi to up production, that makes it all legit. NVIDIA's going to make a lot of money off this. So is the United States government. That gets 25% of that. So, yeah, another good day for NVIDIA as these, the deal with China and selling H200 chips is going to be just all extra. So everything that we thought about NVIDIA and another 2 million chips they're going to sell to China onto that, Nicole.
All right. I mean, look, NVIDIA has been an incredible performer, and plenty of people still pick it for the long run as the leader. What do you think, Joe Mazzola, when we think about NVIDIA and the AI trade, that it's the revolution, and we also have that trickling out effect, to AI, to software, to energy, and data centers, and all that. Joe?
I'm really interested to see in 2026 that trickle out effect, as you mentioned, as we move from just the chip makers and the hyperscalers. What's the next leg, right? We've already talked about the energy needs for these companies and what that's meant for stocks like GE Vernova this year, which is up triple digits. I mean, there have been some real solid winners outside of what you just one would consider the chip makers and even the hyperscalers. So it's broadening out. I know Dan Ives has mentioned some of the things that he's looking for in 2026 would be, how does that affect things like cybersecurity? And what can look at it relative to the Mag 7, it's not number one. That would be Google Alphabet, which is up 65% on the year. And NVIDIA is not even in the top 50 right now in terms of year-to-date performance within the S&P 500. So there are other opportunities out there. I think to a certain extent, they're all going to be derivatives of that NVIDIA chip play, and it's just a matter of kind of determining where those winners are going forward.
Look, people are looking not only to tech. I mean, they come on and they recommend that you've got to be in tech. That's where the growth is and all that. But they're looking to dividend payers and other strategies. I mean, for example, had you been in metals, that would have been a big story, right? I mean, had you been in gold and silver, you would have had an incredible year, the best year since 1979. Let's talk a little bit about that. We had major selling on Monday. It wasn't expected today. David Dietz actually said he's advising clients to get out of silver today, which is up 142% this year. Let's hear some of your thoughts. Joe, I'll start with you.
Yeah, you wonder how much of this silver are people that are kind of doing the momentum trade, right? They haven't really seen much of the volatility in Bitcoin as of late, after it pulled back from, its high. So, where's that next momentum trade? I think probably some of that circulated into silver after it really gapped up post-October. These moves are not traditional moves that you tend to see in the metal. So there's definitely a lot of trade at play as opposed to just an investment. And that's fine. I mean, it's been a fantastic opportunity for investors these last few months, and for traders specifically. And I think you need to be nimble when you are trading that. Gold's a different story. I mean, gold, you can still talk about the demand from the central banks, and that doesn't seem to be slowing down anytime soon. So it does seem like there's a natural base that's forming there that will provide some support. I think silver will be a volatile play going forward, and if anything, if you are somebody who likes that high volatility trade, it's a decent space to be in.
I mean, there's a lot of things that were driving gold, really. I mean, there's always the safe haven, the debasement trade when people are looking away from the U.S. dollar, which has lost some of its value, the lower rate environment, the central bank buying. All of those things help to push gold up above 4,500 a troy ounce. Not to say it's going to do the same next year, but it could still move higher. I don't know. Kevin, what are your thoughts on some of the metals that have really across the board have hit some sort of record this year?
Yeah, I'm an old futures trader. And so I understand the fact that for the second time this week, the CME has raised margin levels. The margin requirement is going up at the end of the day today for going forward. So twice this week, the CME has raised margin levels. And that, if you're trading on leverage or if you're trading on margin, you're going to have to make an adjustment. That's what you're seeing again today. And all they're doing is identifying the amount of risk that's in these contracts. And so they have run, you mentioned silver's run, gold's run. These are historic movements in these futures. And is it lower interest rates? Is it central bank buying? It's probably a little bit of all of them. But is it risk off? But, I've seen this before in my career, and what can really halt a rally are the identification of more riskier markets and simple margins. It'll cost more to hold those positions. Joe.
I think you're the only one who has that story in depth. I mean, that's worth a segment by itself because you're there and you're there with the traders and you just talked about the CME raising those margin levels again. People, there's going to be risk, there's going to be short covering, there are going to be margin calls, those kinds of things because there's been so much heavy trading in metals. But what a year it has been, and way better than Bitcoin. If we had Michael Saylor and Peter Schiff here, they could have it out, but what a year. All right, up next is our bull bear debate, and we're going to take a look at Palantir, which is one of the winners of 2025 Fast Market. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back, Fast Market, right here on Schwab Network. We're checking out Palantir. Palantir has been one of Wall Street's standout stocks in 2025, up around 140%, far outpacing the rest of the tech sector. AI-driven demand and accelerating commercial revenue has helped drive the gain, although its valuation is elevated with forward PE ratio of 180. Okay, so let's bring our co-host back in. Kevin Hayes and Joe Mazzola joining me right now. Just 180. I mean, you know, what's the big deal? You know, the S&P usually is around, what, 17? You know, 180. Kevin, your thoughts? What an incredible run. It's down from $63 up to 207. This has an incredible year. It's up 138%. Your thoughts?
Identifying patterns deep within data sets gives them a unique niche in government, in intelligence, in getting data and helping governments and military make decisions. This is a unique company. It's got unique price activity because it's a unique company. And what they've been able to do is take that government approach to AI and put it to U.S. commercial use. That's when this stock went crazy this year. And I don't know how big it can get or how popular it can get, but it seems like their growth numbers, 121% in terms of revenue that year over year, it's pretty spectacular, Nicole and Joe. And to look at this company now, their valuation, concentration of ownership among owners, that's a problem, or it's a worrisome. But boy, this company continues to outperform, and they have management that is uniquely confident in their abilities, guys.
You know, and just having the government backing in those contracts sort of makes people believe, because there's a lot of questions about different parts of Palantir. There are some that the people understand fully, and then there's sort of this vague section that I have guests come on and say don't fully understand Palantir sometimes, but I do know that the contracts are good, and that makes me feel better. Joe, your thoughts on Palantir?
I mean, Kevin mentioned the revenue growth. I mean, earnings growth over 120% as well too. So, you know, the stock has rallied in line with the earnings growth, and what that happens, you know, what that does is that lowers valuations to a certain extent. Yeah, the forward PE is very high, so you're not buying this stock because you're looking for a value. You're buying it because you recognize that right now 50% of the revenue comes from government, and if they are able to broaden that revenue base in 2026 to become more of a commercial type entity where there is broader adoption of its products, this company has a chance to do very, very well with very solid margins. I think that's the key, though. I think the key is finding additional buyers for their products outside the government, and the government does provide a nice little backstop, but you do want to see a little bit more diversity in terms of its revenue base. I think that is something that investors will be keen on going forward.
And you're going to have some example trades here, guys. So let's start it off. Joe, I think you're going to start us off with the trade here. Right now, it's just below $180.
Yeah, and it's basically been vacillating around this 180 area for the last couple of weeks now. We got up to just shy of 200, kind of pulled back, and I think 175 has been a bit of a support level where basically just a little bit above that. We're right at that 50-day moving average, which we bounced off a couple times. And so in this type of trade, what I'm looking at is selling the 175 put. I'm doing it out in the weekly options with January 30th expiration, which are, if you look at that, it keeps you outside of the earnings. So the earnings are expected for February 2nd. I think when I price this up, you can get about $6 for it, maybe a little bit higher now in terms of the premium that you would receive. But here's the idea. The idea is this, that for what in essence is about a 30-day trade, if I can sell this put taking about a 3.5% yield on the shares, and it really is a way for investors who've been waiting for a pullback. There's two different ways you can do this, Nicole and Kevin. You can put a limit order out there to buy 100 shares at 175, and you're basically locking up $17,500 to do so while you're waiting for that pullback to occur. Or you can sell a put, in this example, a cash secured put. You take in about $6 of premium, which is $600, which, when you look at that relative to the break-even price, which is 175 minus this $6, takes you down to 169. Now, like I said, that's about a 3.5% yield that you're collecting while you're waiting for the stock to pull back. And if the stock doesn't pull back, you keep that premium. If it drops below that 175 price, remember your break-even's all the way down at 169. Now, could it get below that? Absolutely it could. But it's one of those things to where you kind of need to think about, this is, like I said, that second level of AI. Now, a lot of that growth has already occurred in 2025, as I mentioned, or as Kevin mentioned, the stock's up over 100% on the year. But at the same time, if you believe in the story, if you believe in the fact that they are going to diversify their revenue source, and there will be additional clients and customers for them going forward, then you have an opportunity to buy this quite a bit below its all-time high price, and you have a chance to collect the credit while you're waiting for that to occur.
Joe, when I look at a trade like this, and you mentioned the ability to either buy it at 175 or sell a 175 put at $6, this stock could sell off $9 and you would still be profitable on this trade. And so looking at something like this, sure, there's risk on the downside, right? You have to be mentally and financially prepared for risk below $169. That would be your entry to this trade. But anyone who owns a share of Palantir has that kind of risk as well. So this is one that a lot of institutions use this strategy. And oh, by the way, wherever it's trading, as you get closer to that January 30th expiration, you can buy that in and extend duration on another, further out in the option. And when you do that, you can change your strike. So there's, it seems like it's a very one-sided trade, but it really isn't, because this is, I would call it neutral to bullish on this play, because of the fact, what if nothing happens, right? That's always the test on a trade like this. And if nothing happens, this trade is profitable. Now, my trade is similar in nature because it also is profitable if nothing happens. And that is the short call vertical above the market. I looked at the chart, Joe, and we have to be realistic about a stock like Palantir. It has closed now. If it closes today, it'll be about $1.50, maybe $2.50 below its 50-day moving average. Now, the 200-day moving average is around right around $150. So it's playing and trading right around that 50-day moving average. So what I did, I went a little shorter duration on this trade. I looked only out till January 9th, so just out till next Friday, and I sold the 190, the 187 and a half, 197 and a half short call vertical. I collected about $1.30. It's trading probably a dime less than that now, closer to $1.20 as the stock has eased down with the rest of the market. But this is a high probability short call vertical that is collecting theta, that is risk defying. And so this is just one of those trades that you can, because you're selling the call vertical, Joe, as you know, you can take the other side of maybe long deltas you have via stock or whatever in Palantir, but because you're selling a call vertical, and not just a short call. You keep your unlimited upside exposure, Joe. Your thoughts?
Yeah, I mean, I don't want to confuse the viewers here because it looks like we got a long call vertical on the risk analysis there. But, you know, the idea is this, is that if you don't get a lot of movement to the upside, actually, you can get a decent amount of movement to the upside in this example as long as it doesn't get above that 187.5 plus the credit you're collecting, that $1.30. That's your break even. So if you don't expect a lot of movement between now and which is basically a 1 week trade, you know, then this is something where you can collect some of that premium. And once again, as Kevin mentioned with my trade, you can do this again and again and again and again. And this is one of those things to where if you continue to see this thing stay within this range, which it's really been in about 3 to 4 weeks now, and you're not expecting a breakout on that maybe until something like an earnings event in February, then this works. I think that you know, where I'm looking at the charts in the trade right now is that we're basically kind of sitting at an inflection point, right at that 50-day moving average. You know, if you were to throw a Bollinger Band on there, you'd probably see these things compressing as we're getting tighter and tighter and tighter. And when I see that happen, a lot of times I consider Bollinger Band compressions almost like squeezing soap in your hands. Like you don't know what way it's going to break out one way or the other, but you are making the assumption that at some point it's going to move. You know, with Kevin's trade, he only has to hold on to it for a week. For me, it's about a 30-day, but that's the reason that I had to go. That's the reason I'm collecting more credit in doing so.
All right, I'm going to jump in here. I mean, when you think about what's going on with Palantir, the other thing I'll note is it's continually delivering strong earnings every single quarter. This year has been a meeting, beating, exceeding, really placing it on the winners list. And I'll add that the company has raised its guidance for the fourth quarter. And that has brought optimism, forecasting fourth quarter revenue to come in 12% above consensus and projecting operating margins to expand roughly 300 basis points. So you're not really seeing any slowdown ahead for a name like Palantir. Thank you both. Great trades and details there, Joe Mazzola and Kevin Hanks. And we continue to follow the big stories here on Wall Street. And up next, it's Cash Tags. The team from Like Volio will join us and have their very latest sentiment data on Apple. What you need to know. Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides alongside Kevin Hanks. Tom is not with us today. We are live. I'm at the New York Stock Exchange. Kevin's got his ear to the traders there at the CBOE, and we have you covered. And guess what? It's time for cash tags, because we want to talk all about Apple. We bring in Andy Swan, co-founder of Likefolio, focusing on Apple, which has been on a nice upward trajectory. I saw Dan Niles, who we all remember. If you've been on Wall Street a long time, you listen to Dan Niles. It's actually a top pick of his for 2026. Andy, what do you think when you're looking at some of the data that you're seeing on Apple, the products, the sentiment? Tell us a little bit.
Sorry about that, I had myself muted. It looks fantastic. We could not have seen any stronger data for Apple over the holiday season. iPhone search interest was up 66%, which tells us people were really engaged with the new products they got as gifts, or what they were going to get for the people they were buying iPhones for, which model they were going to get. That's the biggest move across Apple's key products, and it just tells us the Apple ecosystem is extraordinarily strong and growing. It's also really good to see, from a gift-giving perspective, AirPods and iPads seeing double-digit gains in searches. And the only thing really negative for Apple this holiday season was, MacBook searches, but that's really because last year was such an abnormally high year in terms of demand, so really tough comparisons there. So overall, when we look at Apple, we see a company that's going into 2026 with the upgrade cycle really looking like it can continue very strongly into the new year. The products they have are resonating with consumers. They're putting up enormous growth numbers, enormous consumer interest and consumer buzz levels in terms of growth for a company this size. It's kind of like, is there anything that can stop Apple at this point? The answer is no, and we've continued to see Apple year after year deliver strong gains for shareholders, and we think that continues into 2026 based on what we're seeing heading into the new year. The consumer just can't get enough of Apple.
Andy, the ecosystem is solid in Apple, and it keeps just promoting. My question to you is, what do you think? I mean, everyone was expecting a super cycle last year. Didn't get it. The stock got up to $260, which at the time was a 42 PE. Now, a year later, it's higher than that, and it's only a 36 PE. What do you think made the iPhone 17 so much more popular than those before? They've managed to outperform without really participating in the AI craze. Now, there's still promises made in the future that that's going to happen, but what do you think made the iPhone 17 attract buyers that the others didn't?
Yeah, I just think that we've kind of gotten away from this, when it was iPhone 8 going to iPhone 9 or iPhone 9 going to iPhone 10, there's these enormous leaps in capabilities of the actual hardware. Now it feels more like a just kind of normal consumer product, gets a little better every single year, so it's less about the big release and more about just my personal need for a new phone. My phone's running out of battery faster. I finally see a feature or a photo that a friend took with the new iPhone 17, and it's better than the ones I've been taking. I finally reached my breaking point where I'm like, okay, I can afford this. It's time for a new phone. It's time to upgrade. I can go ahead and put my payment plan on this, or I'm eligible for an upgrade, etc. So it's much more spread out, I think, than it used to be, and I think that really works honestly in Apple's favor. I know it doesn't necessarily make Wall Street super excited, but what it tells me is that the Apple ecosystem is so embedded into our lives, and this upgrade cycle is so embedded into our lives, that it doesn't really matter when or how much pizzazz there is behind, the new upgrade to the phone. It's about, this is my phone, I'm an iPhone guy, everyone in my family's an iPhone person, and we'll upgrade when we upgrade, and we're not going anywhere. And I think that's a powerful position for Apple as they expand, their ecosystem in terms of, monetizing the users that they have in hand. they're the best in the world at it, and they continue to perform at a very high level.
I mean, I'll add about the camera. I think the camera has been a big draw for this iPhone 17. The telephoto lens, I mean, if anybody saw some of the ads, it was across the pond at someone's house, far away. I mean, and you could see the person and the ducks and whatever. I mean, it's insane. It's so intrusive, but at the same time, if you love taking great pictures, you know, you're going to love this. Also, the battery life and things like that. And the new industrial look, you know, is there something cool about it? The fact that the 17 was outpacing the 16, people didn't necessarily know why. And then, you know, they were back orders, and then the China numbers were really impressive too. People in China wanted the 17. I thought that was interesting. I mean, why do you think that was? I mean, does everybody need an upgrade? Not necessarily. There's definitely a draw.
Yeah, there's definitely a draw. I think you hit on it. You know, the features have improved. There's a step change improvement in the photos, and I think it's less about the ads and the way Apple markets these products, and it's more about now that they've, you know, essentially established and entrenched themselves in everybody's lives. It's really about, you know, when you're with that friend that takes that one photo that you can't believe their phone can take, that you haven't been able to do or you didn't know existed. And so that's what I think is the primary cause of upgrade cycles accelerating. And Apple's there, and the next phase of this, which Kevin alluded to earlier, is AI capabilities. They've been very methodical, very slow. I mean, there's a new post on X every day about how, you know, Siri is worse than what Siri was in 2016 or whenever it came out. Once Apple figures that out, and you have to believe that they will partner with somebody or figure it out in a way that makes the experience magical, then that could add an entirely new upgrade cycle. It could add an entirely new consumer enthusiasm for all of their products in their ecosystem that work together. And I think that could be an enormous kickstart to a 2026 rally for Apple stock and for Apple revenues.
Yeah, I mean, I think we're going to leave it right there, Andy. We appreciate all your insight there from Folio. I mean, there's no doubt that we've seen the interest in Apple, and people are picking it for 2026. We're going to go ahead and trade it, but with the faster charging, people like that, the better battery, the better camera, that industrial sort of look. Andy Swan, co-founder of Folio, we thank you. We bring Joe Mazzola back in for the conversation, and we're looking at an example trade here, went as high as 288 in December. Joe, some of your thoughts?
After you all were speaking so glowingly of Apple, I might have to reconsider my trade here. But look, I have what we call a put calendar. It's mildly bearish. I mean, we're basically $7 away from the strike price. What it is it's selling the 2-week expiry for the January 16th, buying the 4-week expiry for the January 30th at the 265 put strike. Now, the way this works is this type of trade does well if you get a grind down towards that price within those first couple of weeks. I mean, we've already started that grind. We pulled back from the 288. Is it possible we bounce off these levels and continue to go up? Yep. And here's what you have at risk. You have the debit that you paid for. Now, what I like about this trade is that I'm long the earnings volatility, right? Because earnings is supposed to come out a day or two prior to that January 30th date. I think it's the 29th, or it might be the 30th, but I believe it's the 29th. And so what would happen is this, that volatility tends to, I can't say always, but tends to expand or at least hold its value during that earnings expiration cycle. So as the 16th rolls off, you have some optionality. You can continue to buy the 16th 265 put back and then roll it down, or you can turn this into a put spread. You can continue to keep it as a calendar, or let's say you suddenly become bullish on the stock. Now, what you can do then is you could buy that back and then sell out the 270. So now, as opposed to being long the put calendar, now you're short a put vertical. So there's a lot of optionality. There's a lot of different ways that you can skin this cat. And what I like about the time spread is it affords you the ability, within the next 30 days to make that choice if the stock is moving one way or the other. What we've seen recently is this thing's been stuck in a bit of a channel. It's been stuck in a bit of a trading range for a while now. And if that continues, this put calendar should expand in value.
Joe, it's interesting. You've bought the event week. And if you look at a long-term view of Apple's implied volatility, the event usually ends up in about the mid-30s to high 30s, low to high 30s in terms of implied volatility. Right now, Joe, today, that January 30th 265 puts trading about a 23.5 implied volatility. So when you think of that and think of where it could end up, as well as the positive theta you're collecting while you have a calendar spread on, this looks like a pretty attractive trade, as long as you probably exit it before the event. But leading up, like a pre-event trade, buying the event and turning it into some type of trade when the odds are good, not 100%, but pretty good, that volatility will at least stay firm to go higher, Joe. So 23.5 vol, I think I can live with that in the Apple's earnings calendar.
Yeah, Nicole, can I just say one other thing real quick to kind of follow up on that? So, Kevin, when we were on the trading floor, one of the things that we always kind of looked at as we were kind of mapping out, the year, as we say, we always start by looking at the quarterly earnings expirations. Say, okay, well, what month is this coming out? Is it in January? Is it actually February? Because a lot of times, you'll see end of January expiration. Now, this is prior to the weeklies, but that end of January would actually be a February contract. So it's important as a trader to be aware of whether that falls under the January or the February actual contract. And we look at that and we'd say, look, we kind of want to make sure that when we're looking at the implied volatility, what do we want to own versus what do we want to sell? Because you can't buy every month. If you do that, then you've got time decay working against you. You got a massive debit that you got to pay off some way. So you would kind of look at this and say, I'd rather own the vol that I think is going to increase in value. It's going to expand in value. And as you mentioned, looking at that earnings vol trading about 13% below where it traditionally does, getting into that last week of that earnings expiration. It has some room, potentially, right? We always have to say that. It has some room to potentially expand in value, which will hold that value of that put up a little bit higher than it normally would.
And I'll jump in and just say the last thing that you do have the Seaport research analyst concerned about one thing in particular, and that's the memory costs, because it could be good, probably, but it could be bad as well. And while the numbers have been good and the company has exceeded the high bound of the guidance, delivering 47.2 gross margin last quarter, the midpoint of the guidance range 47.5%, it implies potential, expansion ahead. But they do say that this wild card about memory is something that the analysts are watching. It's not something we talk about as much because we don't know that much about the contracts or when they expire because they're hedged right now. We're busy looking at the products, the iPhones and the earphones, whatever you call it. Okay, AirPods. Joe Mazzola and Kevin Hanks outstanding on Apple right now. Okay, so 272 and change. And thanks for joining us there. And we'll talk to George Sillis next. And we're talking AMD. Kevin will have the final trade of the year. Best market. We'll be right back.
For the Grizzlies offense, he was unstoppable, but so was DJ Mitchum on the other end. With 13 of his 25 points in the final period, the electric rookie finished 12 by 7.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides. We're live at the New York Stock Exchange. Busy afternoon here, last trading day of the year. And before we get to all the details and the breakdown, just want to take a look here at markets and where we stand. Market breadth, somewhat weak, a lot of red on the screen overall. When I look at just the heat map, NVIDIA is the one thing that pops out in green. The S&P is down 0.25%, and the Dow is down 0.33%. NASDAQ down 0.3%. The Russell is also with a down arrow. I mean, this year, incredible. The S&P is up 17%, the NASDAQ is up 21%. But clearly, you can see that Santa Claus rally is not happening, just not yet. You still got a couple of days left. And here's a look right now, 10-year bond yield at 4.13, 98.10 on the U.S. dollar, gold 43.38 a troy ounce. It crossed 4,500 a troy ounce in the last week or so, right? It's been incredible the moves we've seen in metals. Oil, 57.78 the barrel, so the 57 handle is notable. And Bitcoin just can't bring it, can't get to 90,000, 87,820. Now we're back to the stocks here, and we're looking at AMD, Advanced Micro Devices, which really has had a good year, right? It's up about 80% this year, hitting record highs of $267 in October. AMD saw demand for its CPUs and GPUs, AI data center products accelerate. Competition remains fierce in the chip space. I can't say that more emphatically. And the stock is nearly 20% below the all-time high. So what's with AMD next? Let's take a look here. The charts, the story. Joining me right now, Senior Markets Correspondent George Sillis is back. So glad to talk to you about AMD. We do have fierce competition in this space, but AMD has always been a leader. Lisa Su is sort of really well respected too, running this. Your thoughts?
Well, I think if you look at AMD, and you're right, I mean, it did pull back off the 260 levels that it hit earlier this year, around November, December. And that's to be expected considering some of the play movement or movement to the downside we've seen in companies like NVIDIA, Broadcom as well. But I think if you look at AMD, the story really for the business and the technology is inference. The reason I say this is that most of the move we've seen in the bigger players like NVIDIA out there have been for GPUs, chipsets to train artificial intelligence models. And I think maybe the narrative coming up into this year and maybe next year is going to be the results of that training, which are more standardized inference or inquiry-based applications from artificial intelligence, to which point AMD actually may increase their market share position across the board. It is a very complete stock, I suggest, Nicole, if you look at it from the standpoint of their technologies, everything from CPUs, GPUs, application-specific integrated circuit chips like Broadcom. At the same time, a lot of people don't recognize that field programmable chips, which are used in industrial application, factory automation, automotive segments, are another segment that AMD has as well. So it's a very complete company when it comes down to the technologies they offer versus more so than NVIDIA, which is more sort of a one-hit wonder kind of technology, which is phenomenal, there's no doubt. But nonetheless, if you're looking for something that's a little bit more broad across horizontal spectrums in technology, AMD is the one. I think, going into 2026, the concerns are still going to be about the customer tier 1 customer concentration risk. Now, if you look at AMD's technologies, they rolled out their MI350 chips. They're expected to roll out their MI450 chips by the second half of 2026. They do have tier 1 customer deployments already in line, and this includes Microsoft, Meta, OpenAI. But I think the OpenAI situation is a little bit tepid still, considering some of the exposure companies like Oracle have in terms of the commitments to be fulfilled by OpenAI. Those are still kind of questionable going into next year. But nonetheless, I think if you look at the data center growth for AMD, 94% year over year, and as I mentioned, very complete in terms of their broadening business. Inference technology chips are going to be, I think, in high demand coming up in the next couple of years. And valuation, too, for AMD, trading around 33 times next year's earnings with 62% earnings growth estimate. So it's trading at a discount to earnings growth, and that might be, again, something compelling to consider with this name.
All right, and, just a quick final thought here, because we think about the competitive landscape, what AMD is not. It's not NVIDIA, but it's still well loved, the expectations for 2026. Final quick thought?
Well, yeah, I think, you look at NVIDIA, they're still the preeminent chip out there across the board. But maybe there's going to be a place for second-tier chips not as good, but good enough. And I think that's the story behind AMD going forward. The challenge right now, Nicole, just broadly speaking, is catalyst. This market has been absent really a catalyst for the last couple of months. And I think that's why the market stalled out, and that's why we've seen some of these bigger names like AMD, NVIDIA also stall out as well.
All right, George Silas, great to see you. Happy New Year. Thank you so much. We bring Kevin Hinks back in to look at an example trade here on AMD, which does have enough arrow today. Kevin, show me your thoughts.
So, looking at AMD, it's what really amazes me is if you look at August 5th on the calendar, AMD trading about $174, NVIDIA trading $175. So you can make the case since late summer, AMD's outperformed NVIDIA. And so the fact that it is now sold up back off through its 50-day moving average going into next year, Nicole and Joe Mazzola, the paper money trade I looked at here was something in the short put vertical. So I went out to January 16th. They don't have earnings until February 3rd. So I went out to January 16th, the monthly expiration in January, sold the 200, 190 put vertical. So what I did here was get myself $15 on the downside, almost $16 on the downside in terms of room for this trade. And then I sold that for about $1.45. It's trading about $1.35 now as the stock has come off its lows here. But selling a high probability short put vertical, the exact opposite of what I did in Palantir. So in this way, Joe, a $10 short put vertical, the risk is the $10 strikes minus the credit I took in. Joe Mazzola, your thoughts?
Stepped away, and we thank him for joining us on Fast Market, but I'll jump in and just talk about the stocks and the SMAs. I mean, you look at these indices that really, compile these semis, and what a great year it has been. And the stories come out every single day. I mean, not just about the circular spending, but about the growth and the earnings projections. The earnings projections for 2026 are stellar. Are they too aggressive? Are they, when you look at that, I mean, just constantly, right now, you look at NVIDIA's China orders go off the charts. You have NVIDIA's $5 billion Intel bet. It's just constant. We had SoftBank and the OpenAI investment. They did the funding for that yesterday. You have NVIDIA buying Grok. You have Meta buying Manus, for AI agents. I mean, there's just so much going on, Kevin. Final thoughts here for 2025.
When you look at AMD, the question is always, can they compete with NVIDIA? Because when they brought out really good chips in the past, NVIDIA's come out with a better one and extended its lead. And then the question is number two, are they number two, or is it like a Broadcom? Are they number two? And is number two enough? If NVIDIA's the clear number one, is AMD good enough? Is that profitable enough to be number two? I think the question is probably yes, and lately their stock has been outperforming. So This is a chance to sell a below the market, short, put vertical, high probability, collecting theta, and of course, as always, Nicole, risk defined.
Yeah, look, so go the chips, so go this market, because they're so heavily concentrated in the indices. And, you know, I'll have my AI agent call your AI agent, Kevin. And we're going to be in a whole new world. And we'll have Optimus robots walking around, you know, from Elon Musk. Thank you, Kevin Hinks and Joe Mazzola. And everybody, thank you for joining us here on Fast Market in 2025. We'll be back in 2026, so make sure you keep around here on Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oh, P.O.
Schwab Network, where real-time market
Must go to
coverage
sleep on y'all.
meets expert strategy.
From the opening bell to the
Everything
closing
just
bell.
not even moving for real.
Get inside the minds of pro traders.
My point is that if they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, that a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met him 20 years ago. Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
First I was looking at that, but then yeah, go there. Check. Come on, bro. Why am I not seeing this? We gotta clean. Bro, this is obviously it, bro. I don't know why I'm not seeing that. The whole time I'm looking right at it and overlooking it at the same time. I'm kind of on front, dude. Just has to go right here. how could it be wrong? Like, why would you want to move your king there, though, bro? You chased him out of there, of course. I don't know. At first, I thought it was this. Bro, it is not takes. I mean, it's takes with the king. Then what? I don't know what's happening. Hey, I'm trying to get over the hump, but it's tough. I ain't gonna front. I ran out of luck. I'm back on check. I ain't even gonna flat, but you know I'm a vet. Yeah. Up in the trenches. You mess with me, you get stitches. Yeah, you and your missus. Yeah, wash them dishes. Hey, turn my beat up, boy. I don't see it. If it's not this, what could it be? I'm just gonna try that. Like, it's not even mate. Or it actually is. It was pinned. It was pinned the whole time, and I'm sitting here like confused. So that's why I say like the rust is real. The rust is real. The rust is always real. La. So how's he defend mate right here though? Oh yeah, that would be definitely a check right there. Definitely would be a force queen trade with it. Oh, I'm so cooked. Like super cooked. Mega cooked. Oh! Yeah. Hey. I don't know, bro. I don't see it. Don't worry, it's puzzle. This doesn't make sense to me. Let him take that. It doesn't make sense. Over here after a while, and then find somewhere to put this bishop. It's crazy. We could just go over here, right? Nope, can't do that. Bro, this check, why does it look like something? It's not nothing there, it just goes there. I mean, even if we did go right here. I mean, that's not even anything. That's you losing, like, getting both your pieces on the attack connection. This is like really troubling me. Wait, I don't know. I really don't know. I don't know. Somebody in the chat tell me. Dang, bro. There is though. And I really had to see check, and he just moved over. Wow, slap somebody, bro. Hey y'all, I'm gonna close it out early, y'all. I'm kind of tired and I'm about to have company. I'll see you guys in 2026. I love you guys.